The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon. Welcome back. Today is Thursday, 4th day of February, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, not to worry, point any internet-connected browser to cfrn.net. cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just don't have access to the chat box. We also stream live during this show at youtube.com/CFRN. We also archive each one of our daily shows there. We've been broadcasting live every day since April of 2005. In 2011, we added video to the mix. Prior to that, it was audio only, a podcast. Now, if you happen to be listening to this broadcast after the fact as a podcast on iTunes or iHeartRadio or Spotify, wherever pods are cast, you can hit pause on your podcast player, jump over to youtube.com/CFRN and find the show with today's date on it, and you'll not only have the audio, you'll have the video as well. So you can see the charts and everything we talk about. Normally on Thursdays, Dr. Tom joins us. He has a sore throat today. So it's hard to do radio when you got a sore throat. So he's taking the day off, but I have good news. Our good friend, Wall Street money manager, Mr. Garrett Jones, will be joining us about 1:15 p.m. Eastern for those of you listening live. And for those of you listening after the fact, if you're here to listen to Garrett talk, to hear what he has to say, then just fast forward to about 75 minutes into the broadcast, give or take, okay? Let's open with a word of prayer, as we do. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. As we gather today, we praise you for this broadcast and your purpose for it. We ask that you would reset our agendas as we sit in your presence. Your word tells us that where two or more gather in your name, you are there. We ask that you would recalibrate our intentions and refocus our hearts. Your will for our lives does not always reflect our plans. We ask that you change them to reflect your will. Your word says that you will give us the desires of our heart. And what we believe that to mean is that your desires should become our desires. So we ask today that you place your desires in our heart. In Jesus' name, amen. All right, let's go to the numbers. These are the numbers from around the world. Cash markets, the indices as they're called. Starting in the US, the Dow is up. Let me refresh this. Dow is up 256 points. NASDAQ up 103. S&P 500 up 28. And the Russell 2000 up 30. The mover and shaker there is the Russell, on fire to the upside, up 1 3/4%. In the commodity baskets, crude oil up 27 cents, trading 55.96 last. Gold down $43.20, trading 1791.90 last. That's a drop of almost 2.5%. Silver down 69 cents, trading 26.19 last. That's a drop of 2.5%. Remember, when silver moves $1 in price, if you're holding a futures contract, that's worth $5,000. There's going to be one of these times that we break 25, hold the pullback. We're going to go to 30. We're going to break 30. We're going to hold that pullback. And I believe that the distance or the amount of time it takes to go from 30 to 50, it's going to make our head spin. I said that about Bitcoin over and over again and again as it struggled to get back above 10,000. And it did break 10,000 times. I'd have to take my shoes off to count how many times that happened. But it failed to hold the pullback until it did. The rest is history. Now, in the Asian markets today, at the close, Nikkei down 304 points, a little over 1%. Shanghai down 15, Hang Seng 193. And in European markets at the close, FTSE down 4 points. The DAX gained 126, and the CAC gained 45. Closest thing to a mover and shaker there would be the DAX, which is up almost 1%. In fact, the CAC is almost up 1%. So I think we had 2 back-to-back with all markets green. But today, it's a red day in Asia. It's a mixed day in the UK. And so far, a big green radio Thursday here in the US of A. With that, I'll go to Michael and get a recap of what happened this morning in the live training room. After that, I'll be back. We'll go over the Logic 247 alerts. We'll go over the Concierge Trade Alerts, all that and answers to your questions. And about an hour from now, Garrett will join us and we'll see what he's up to. I think it's been a little more than a week, maybe 2 weeks since he's been on the show with us. So look forward to talking with him. Michael, if you're ready, you can take it away.
I am ready. Here we go. All right, good afternoon, everyone. Today is Wednesday, the 4th day of February, 2021. Let's see, if you can read the spreadsheet, read all the CFTC risk disclosures down at the bottom. Today we made 2 ticks in crude oil, we made 83 ticks in gold, and we made 1 tick on the ES. That put us at plus $862.50 on the morning session. Today it took 9 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 25 trades this morning. Most of those are on gold. Actually, 21 of them were on gold. On the year now, we are at 21 on gold. We took a total of 26 trades. Hold on, let me fix that. Okay, on the year now, on the month now, we're at 3,912. That's over 4 trading days, averaging $978 per contract per trading day. We are now on our 236th consecutive day of getting the goal, and so far our 23rd consecutive day this year. So on the year now, we're at $18,287. That's over 23 trading days, averaging $793 per contract per 2-hour trading day. Okay, now, if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Right here on the homepage, it says free 5-day trial, no credit card required. Just click on that and it'll bring you to this page, eminitrainingschool.com. You can go directly to this page if you want, www.eminitrainingschool.com. And on this page, we give you some information, but all we really ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you if you want to. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you gotta click that link, all right? Okay, I'm gonna finish with gold today. I'm gonna start out with the ES, then go to crude, and then go to gold, because the ES was really, really horrible trading today. It was difficult to say the least. And we'll start out here at the very beginning. All right, so you see there was some YBR trades right in here. YBR with we weren't really trending, so I couldn't really take a bounce off the BBC right here. It did work out if you did do it, but we weren't really trending very well. The same thing right here, we weren't really trending very well. You could have taken a short right here. You might have gotten a little something out of it. Then there was nothing in here and nothing through here. And then it started to move up, but it wasn't giving us the trade setups right in here on this leg up. Okay, then it came right back down and didn't give a trade setup. It was just like this for a lot of the morning. We had an opportunity here that was pretty weak. We ended up with a break even on it. Another one right there, we ended up with a break even. Then a whole bunch of garbage right through here, just no trade setting up at all. Then right here, we finally took 1 tick profit, and it really didn't give anything else. I mean, it gave some YBR trades. There was one here that worked out pretty well. One here would have been a break even. One here that would have been a break even. One here that would have worked out pretty well. One here that would have been a break even. You know, if the YBR trades aren't working, then nothing's working. But that was ZS this morning. We ended up with a +1 tick. Now on crude, we had just a few trades, and just a couple of trades. We missed this one. I was telling everybody to watch out for crude because it's like, it's gonna sneak trades in on you when you're not looking at it because you're preoccupied with everything else. And it did just that right here, gave a nice trade to the downside. And it followed it up with another trade right here. We picked up 10 ticks profit on that. We missed a long right there, missed a long right there, and we got a stop out right here to the tick, and that was right at the end of the session. During the break, it gave one opportunity on the long side, really just one. Now, gold. The first hour in gold was just really, really active. Okay, so let me scroll all the way back there and we'll get into that. Okay, so right here is 9:30 when gold kicked off the morning. There was a short right here off the BBC that looked like it might have stopped out to the tick. I wasn't in that. Then it moved down and it started to give more opportunities on the downside. There was one right here. Then the cycle moved up top, so it started giving long trades in here. There was one right there, one right there. This would have been a break even. This would have had profit. Then finally I got into it right here and I took 10 ticks profit on that one. Then I got into the next one, following it up, and I took 8 ticks profit on that one. And I missed that one, got a break even on that one. I took 6 ticks profit on that. Then I had another break even. Then after the 6 ticks profit, I took 7 ticks profit on that one. And then, I can't read my own writing. 7 ticks profit and then 6 ticks profit. And then I missed that trade right there, which would have been a winning trade had I taken it. This one over here, we picked up 5 ticks to get us at +49. Then we had a break even, another break even. Then from 49, we went to, there was some big trade in here somewhere. I don't know where it is, but there was a big trade in here that we took. And we went up to 64. Then we had a 7 tick trade, which was probably right in here, went up to 71. Then a small trade. I don't know where all these were. I lost track of them. But we had a break even, then a 7 tick trade, then we had a stop out. The stop out was after we had gotten up to 76 ticks, and we stopped out and we're down to 68. We had a break even, then another break even, then 1 tick to put us at 69. Then break even. I think this was the 1 tick right here. I think both of those were break even. Yeah. Then we had after the 1 tick that put us at 69, we had a 6 tick to put us at 75. And then we followed that up from 75 up to 83. So we had an 8 tick to put us at 83. We had one more break even right before we ended the morning session. So gold was really active this morning. In the first hour, particularly, it was really active. During the break, there were a couple of spots you could have traded there, here, and here. But anyway, that was what we did this morning. Now, I told the folks this morning that I was gonna show them some stuff that I planned to show them some stuff that I'm actually working on that would kind of change the way that they think and trade. You know, if I get it working the way that I want to get it working. And, you know, we'll look at gold for an example. You know, in gold, well, of course, what we would be doing is trading counter trend with the trend. Okay, now I know that's a lot for me to say and a lot for you to get your head around, but I'll go into it a little bit in the partners meeting tonight. If you're not a partner and you want to get into the partners meeting, you should get into that. But you know, there would be a trade here, there would be a trade here, there would be a trade here, 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 here. You know, just lots of opportunity. And this is on a really fast time frame. The same stuff works on a really slow time frame as well. And that's more what I'll go over tonight. But there's a lot of little bits and pieces, and I'm just going to slowly go over these things as they come together. But yeah, so that'll be in the partners meeting tonight. Now back here to, hold on, this. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Right down here, it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that link. Okay, if you don't click that link, we don't know that you took the free trial. Now back to the spreadsheet. Today is the 4th day of February 2021. As I said, we made 2 ticks in crude, 83 ticks in gold, and 1 tick on the ES. Put us at plus 86, 862.5 on the morning session. And today we took 9 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 26 trades this morning. On the month now, we're at $3,912. That's over 4 trading days, averaging $978 per contract per trading day. We are now on our 236th consecutive day of getting the goal, and so far this year, 23 consecutive days. All right, so on the year now, we're at $18,247. That's over 23 days, averaging $793 per contract per 2-hour day. All right, and as you can see, I missed a bunch of the trades. So, the goal isn't to gain $793 per contract per day. It's to gain $100 per contract per day. The 793 is just because I keep trading and there's just a lot of opportunity. Okay. All right. That's it for that. With that, we can pass it back out to fabulous Phoenix, Arizona. The link for signing up to become part,
EminiFuturesTrading.com. If you want to just get signed up, go straight to EminiFuturesTrading.com.
That's to take the free trial, but to sign up.
That's the free trial is
Emini Trading School. That's right. EminiFuturesTrading.com. Yeah, that's
EminiFuturesTrading.com. There you go.
Sorry, Dwayne's right.
That's the ticket.
EminiFuturesTrading.com. Sorry, I got it mixed up and all that. All right. So it's back to you.
Let's see. Recap of the recap.
Today, it took 9 minutes and 1 trade to get to $100 per contract.
And that's a good job. Hey, what Michael was saying, guys, in the beginning, when you're first learning how to trade, it's all new. It's exciting. You want to spend a lot of time in front of the screens. You want to try to absorb it all, but I'm just going to tell you, you'll never absorb it all. It'll be a long time before you understand it all. So if you can rein in your enthusiasm a little bit, focus on just what you need to know to reach your daily goal every day, and make that your priority. Okay. Now, the way we've set up our educational program, when you come in as a passport holder, we do want you to start trading right away, but not with real money. We want you to start trading in your demo account, in your simulator, because the only way you're ever going to learn how to trade is by trading. You just don't have to use real money in the beginning. Every morning for 2 hours, Michael is teaching you our strategy, our methodology, and it never changes. As he goes from one market to the next market to the next market, he doesn't have to recalibrate, rethink, add a different indicator, any of that stuff, because we use this. Everything we do is fluid across all markets and all time frames. Now, the alerts that we send out around the clock, 24/7, from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern, that's an important part of the educational model, because it gives you the opportunity to put to use what you've learned in the room in the morning every day. Now, as time goes on, when your phone or tablet or PC makes the telegram sound. That's the call for you to not trip over your feet trying to get to the computer because you got to hurry up and put on a trade, because I almost always build in plenty of time for you to finish what you're doing, get to your computer, get your thinking cap on. Because what we want you to do is we want you to look at the alert, and we want you to look at your chart. I want you to see on the chart why it's an alert, why it's a window of opportunity. I want you to understand the entry. I want you to understand the target. And then as it triggers, we want you to use your simulator, your demo account, to trade the alert. The more times you repeat this process, the better you'll get at it. Because remember, to swim, you got to get in the pool. To learn how to trade, you got to start trading. Beautiful thing, I mean, the simulators are like your water wings or your floaties, right? You don't have to worry about drowning because you're not trading real money yet. You won't trade real money until you qualify. And qualify means you put together 10 consecutive days in a row where you reach your goal, 10 trades or less. Only then do you think about going live. That's when the blueprint will give you the green light to go live with just one contract. So it took Michael this morning 9 minutes to reach his goal for the day. Now, for those of us who have worked hard all our life, we have a good work ethic, it feels kind of weird to sit down and be, quote unquote, finished for the day in 9 minutes. It won't be 9 minutes every day. Some days it'll be 30 minutes, some days it'll be an hour, some days it may take a couple hours. Okay, it takes as long as it takes. But one of the most important qualities that you have to be a consistently profitable trader is patience and self-discipline. And so early on, you find out if you have that patience and that self-discipline, because once you reach your goal for the day, you put the mouse away. Doesn't mean you can't continue to look at the charts because you're new to trading and it's all very exciting and you still want to learn as much as you can. Just want to caution you about burning yourself out. And also, not all screen time is healthy screen time. So I'll get into that a little more in today's show and in the coming days, because as more and more people become members and start this journey, you're going to find that what I'm telling you is so true. I can't even count the number of times that I've had one-on-one mentoring sessions with someone who would tell me how, man, this morning, I had my goal in 15 minutes, however long it took. And then I kept trading. I went from being positive on the day to being in the hole on the day. I remember clearly the first time that happened to be way back in 2005. This is when Michael and I used to still trade the Russell on a regular basis. That was sort of our go-to thing. That was back when the Russell, it was called the ER2. It paid $100 a point.
You might know that
point.
Though our stuff does work on the Russell.
Oh, it does. Oh, absolutely. Yeah, because we do alerts every day on the Russell. In fact, I'll show you today's alerts. So I came in one morning now in Phoenix, because we don't do daylight savings time. The opening bell on Wall Street is 9:30 a.m. Eastern, but here it's 6:30 a.m. So I had to get up really early, to go down to the office downtown, to be in my chair, set up, ready to go, etc. Now, this was before Globex was even a thing. I mean, it was there, but my guru at the time, he wasn't a Globex trader. He never taught us anything about Globex. For him, Wall Street was 9:30, or trading was a 9:30 in the morning to 4 in the afternoon kind of thing. So anyway, long story short, I show up, I get my coffee, I sit down, I'm ready to rock and roll. Wall Street opens, I trade the Russell long, and before I know it, $5 grand. Let me add the part too about where I was trading way more contracts than I should have been at that point in time. So, like that, I was up $5 grand. And I took the profit. I mean, wow, this is awesome. Everything I ever dreamed. Got up, went outside, prayed a little bit. I was thankful, humble, grateful. And then I started making all these plans in my head. Okay, so you got 5 grand more than you did when you came in this morning. Okay, so I'm gonna give some here, then I'm gonna send some over here, and then I'm gonna do this. You know, I have the plans of men. You know, what is it? There's a saying about God laughs while man's. I think John Lennon said this of all people. God laughs, or somebody else. God laughs while men are making plans. Somebody in the audience can clarify that for me. But anyway, you get my picture. So I promptly go back in, you know, after doing all the right things, praying, being thankful, grateful, humble, all this, and not looking, you know, to go buy a new car that day, because I had just earned a down payment on a very nice car. But no. I was going to send some to Mexico. I was going to send some to Africa. Plans of men. By the time the closing bell rang on Wall Street that day, I was down almost 10 grand in my account. I was shell shocked, to say the least. I'll never forget that drive home. I was dealing with emotions and feelings that I had never experienced before. And the only way I could find to console myself was by repeating over and over, Dwayne, if you can lose that much in one day, you can earn that much in one day. Shake it off. Shake it off. Tomorrow's a new day, and you'll earn it back. That was the beginning of a torturous death spiral mentally. The two things happen when you go live too soon and or when you trade more contracts than you've earned the right to trade. There's the financial damage, which is the least of the problem. The psychological damage that you do to yourself. That can create scars that it takes a long time to overcome, especially if you keep compounding it, okay? As long as you go down the same road, you're going to end up in the same place. Up here on my screen, it says we cannot solve our problems with the same thinking that created them. When you become a member at CFRN, you've obviously come here and become a passport holder because whatever it is you've done in the past didn't work for whatever reason. So you've got to cut the ties. Whatever it is that you did and thought in the past that didn't work, you got to leave that baggage behind. You've come here to make a fresh start. Some people think, well, because I've traded in the past, even though I wasn't profitable, even though I lost a lot of money, I probably don't need to do those 10 days in sim. I probably don't need to write a business plan. I probably don't need to write a trading plan. I probably don't have to do what the other guys do because I've got experience. Okay, well, if that experience was net positive, you probably would not have become a passport holder. So park your ego out of the office. It'll be there waiting when you're done working for the day. Come with a humble heart, with a contrite spirit. What we've put together and the way we've put it together, with Michael teaching you in the morning and then me giving you these alerts around the clock that you could follow, the goal is that you eventually learn to spot these opportunities yourself. We want to get you to the point where you don't need Michael and you don't need me. We hope you'll still hang around because that's what makes a great community. So we don't want you to go anywhere. We just want you to become self-sufficient. So with that said, let's take a look at the alerts so far this week in Logic 247. We're in week 131. And Sunday night at 6 p.m. Eastern, we've issued a total of 63 alerts, 13 never triggered. Still waiting on the results of 3. So we've had 47 actionable alerts. That's 47 alerts that actually triggered. 3 of those got stopped out based on not risking more than $300 per contract per trade. That's 6% of the actionable alerts. Now, that's not a typical number. Over the last 131 weeks, we've averaged 20% alert get stopped out based on not more than $300 per contract per trade. Now, let me show you what alerts look like, and then we'll go to the chart. Okay, we can start. We'll start today and way up. This morning, we had an alert on gold to be short. That got a PT designation. PT is when price goes 60% or better to the initial target. 60% or better. Now, we only record the initial trigger for the record. Most alerts trigger multiple times. On a difficult week, PTs will be about 30% of actionable alerts. On a week where we have beautiful follow through the whole week, like last week, I think it was around 10%. Okay. So then this morning we also had a long on the Dow. The number that you see in the parentheses, Valerie comes through after I put out the alert and she does the recap. And so whatever the current swing high or swing low is on that move, that's what she puts here in parentheses just as a point of reference. Doesn't mean it stops there. In many cases, it continues on to the second, the third, the fourth target, etc. So the way you read it, this is alert number 6,411. It's the Dow, the YM, which pays $5 a point, versus the S&P, which pays 50 a point. The idea behind this alert is you want to be long at 30,870. The initial target, 30,890. For those who are just looking to get their goal for the day, whether it's 2 points in the S&P, or 20 points in the Dow, 10 ticks in gold or crude, etc., that $100 per contract per day that Michael was talking about that he got this morning in 9 minutes, the initial target is designed to give you that. And then after the initial target, on a long, you've got potential resistance at second target, and then potential resistance, third target, and then alerts have a final trade to target, which is the weekly trading zone. Price is always trying to get to a weekly trading zone, either the one over or the below. The way you know the difference is where price is relative to the BBC. I'll explain what that is in a second when I go to the chart. So if it's a long trade, the final trade to target is the zone overhead. On a short, it's the zone below. So here's the S&P. Long, 38.45, initial target, 38.47. Then the next target, 38.59. At the time Valerie came through to do the recap, this had risen to 38.49 and a quarter so far. So we'll see where it ends up when we go look at the chart. And here's a long on the Russell, 2188 to 2190 to 2200, all the way up to the zone. And this is a short on gold. Sell 1816, initial target 1815, next target 1810. The time of the recap, it had dropped to 1811. So from 1816 to 1811, that's $500 per contract traded. If you've earned the right to trade 2 contracts, then that's a $1,000 move. 3 contracts, $1,500. Now, the way you earn the right to trade more contracts is first, you put together those 10 consecutive days in a row in SIM. Our 24/20 blueprint, there's the green light to go live. You go with just 1 contract. Now your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. Now, the important thing about the second contract is you're adding it with profit you earned in the market trading. The blueprint will tell you when it's time to add number 3, number 4, number 5, etc. You only add one at a time, and you only add with profit you earned in the market. The blueprint says it's time to add another contract, and you don't have profit in your account to underwrite that contract. You don't add another contract. You book one mentoring session or both, and we help you figure out what happened. We do the trade one by one, step till we figure out what happened. Here's a short on the road, still waiting, still waiting. This one never triggered. This is a short on silver from 84. At the time of recap, it had dropped to 72. That's a 10-cent move. A $1 move in silver is worth $5 grand. So a 10-cent move would be worth 500 bucks. Here's a short on gold, a long on crude oil. Now on this one, from 56 to 56.90, we had one yesterday that went the entire distance. That's a $900 per contract move. By the time this recap was done, it had gone to the second target, a little past the second target at the time of recap. Here's a long on the Russell. Here's a long on the S&P, the Dow, and here's a Dow, no trigger. Short on silver. This is a long on the NQ, long on the Russell, long on the S&P, short on the Russell, short on the Dow, short on the S&P, a long on gold, long on the NQ, long on the Russell. Now this is a stop out on the red X, means that one was stopped out based on not risking more than $300 per contract per trade, less when possible. I use market structure, and I teach all of our traders a 3-step method to use market structure to determine where the stop goes. Most methodologies use like a percentage of the ATR, or there's any ways that you can determine your stop loss. But while in the room, we use an 8-tick hard stop on everything, because there we're just trying to teach you the importance of always having a hard stop. But each moment in the market, each tradable moment in the market is a unique moment in the market. And by addressing the chart, by asking the chart will tell you where that stop needs to be. And if it's more than $300, you go to the second step. If it's still more than 300, you go to the third step. And if it's still more than 300, you pass and wait for the next trigger. Once an alert triggers, there's a greater probability of it triggering again and even again than not triggering again. Important prices, important areas are almost always tested. Here's a long on the S&P. Here's a long on crude oil. This was a no trigger on crude. Here's a long on Russell, short on gold, stop out on the NQ. The NQ is very volatile. Got to be careful with the NQ. Here's a long on the Dow, long on the S&P, long on the S&P, long on the NQ, long on the Dow. Now this brings us to Monday. There's a stop out, silver, no trigger. That's a long on crude, NQ, long on the Russell, Dow, long on the S&P. B is buy, T is initial target. On a long, potential resistance means second target, third target, fourth target, fifth target, final trade to target. That's our highest weekly trading zone right there, 3815/16 this week. No trigger, no trigger. NQ. Now we're at Sunday night, okay? We go to work Sunday night, 6 p.m. Eastern. That's when the Globex market opens. That's when we go to work, and the alert channel stays open around the clock from Sunday night at 6 p.m. Eastern till Friday afternoon at 5 p.m. Eastern. So here's a long on gold. Here's Here's a long on crude oil. No trigger, no trigger, no trigger, no trigger, no trigger. The market Sunday night gapped lower on the open, and then it turned, and that's why none of these triggered, because these were shorts, and price just never got there. Long on silver, a long on gold, no trigger, no trigger. Short on the Russell, no trigger. And the first on Sunday nights, the first alert put out is usually the S&P. That's just how my workflow goes. This is Mountain Standard Time, so this was 6:02 p.m. Eastern. We had an alert to be short the S&P, 36.79, initial target 77, second target 75, and the final trade to target was 65, and price at the time Valerie did the recap was at 56. So from 79 to 65, that's 14 points, $700 per contract traded. If you've earned the right to trade 2 contracts, then it's $1,400, okay? We're in week 131. Last week, week 130, we had a total of 74 alerts. 13 never triggered. 61 actionable alerts last week, which 6 were stopped out. 10% of actionable alerts stopped out. Not a typical number. The average over the last 131 weeks now is 20%. Now the PT 961, and so 9 is what percentage of 61?
It's about 14.754%.
About 14.75%. So better than, well, I don't know what the average number is. I just know that a bad week's about 30%, a good week's about 10%. So with that, let's go to the daily chart of the S&P. Whenever you start your trading session, even if you don't trade the S&P, I suggest you go to the daily chart of the S&P. If you trade any of the indices, S&P, Dow, Russell, and Q, the S&P is considered the bellwether. So whatever it does, ultimately the others are going to follow. Now, sometimes they'll lag behind, sometimes they'll get out in front. But if the S&P is moving higher, the others will join in, okay? Now, back to last week on the 26th, we had a daily doji. We talked about that on the show. You can always go back and watch previous shows. Again, if you're listening to this as a podcast and you're not driving, you can go to youtube.com/CFRN and you can listen and see the charts that I'm talking about. Okay. So when the market opened, the night of the January 26th, market closes at 5 p.m. Eastern. Globex opens at 6 p.m. Eastern. So when the market opened, I drew this little line right off the doji there with long above, short below, and price came down to the 24% Fibonacci price retracement level. Buyers came in, drove it up. We opened on the 28th, well, 27th, the night of the 27th, which begins the session of the 28th. We came down and we hit that 24% fib again, and then we bounced that day all the way up to red and falling resistance. That resistance sent us back down to close below the BBC. This was the second time we closed below the BBC since November 4th. Look at all these pullbacks to the BBC. It held and it held and it held and it held. Eventually it has to not hold, otherwise you have a stagnant sideways market. So we closed below. We took out the 24% fib. We didn't make it to the 38, but what we did make it to was this. And we highlighted this in the discussion group and here on the show. This swing high was part of our Fibonacci price extensions that we used. If you go back, we used those for a couple months, from the low to the high to the retracement low. That projects prices into the future where the market hasn't gone yet, where based on math, not politics or pandemics, that you might expect to find potential resistance. You can think of it as an obstacle, you can think of it as a target, it's both. And so from that swing high, now you see this consolidation and support here, and this low right here, that's where the market found support. When I say fibs are an area, please take that to heart. Did we turn right at the 24% fib here? Yes. Did we turn right at the 24% fib here? Yes. Where did we turn here? Between the 24 and the 38. So write it down. Write it on the tablet of your heart. Fibs are an area. They give you an exact price point on your chart, but they're an area, and as integral as they are to the universe that we live in, the whole golden ratio. And I won't go into a fib speech today, but if you haven't studied fibs, get a cursory education, book a mentoring session with me, and I'll go over it with you. You don't need to spend a lot of money on expensive software, and you don't have to, go real deep. There's just some basic things to understand, and it will help you in your trading. But again, it's not a standalone trading strategy. So the market found support for the reasons mentioned. We got back up to the BBC. We got above it. Okay, we hit red and falling. We got through that, and here we sit back above that little line I drew, almost as if none of this ever happened, but it did. Now, the high of this day, remember when we opened that night, we initially went higher, and then when we got, so this was a little green candle right here, but then price dropped below where the candle opened, and that changed it from a green candle to a red candle, and down it went. Now, this is what happens when buyers stop buying. It takes financial commitment for price to rise, but for price to fall, all that is required is for buyers to recognize up against something they cannot overcome. And so rather than just keep, throwing money away, they just stop buying. And when I say the buyers, I'm talking the large institutional buyers. Now, retail traders are a part of that too, but it's the institutions and their decisions that contribute the most to the order flow, and order flow is what moves price. Nothing else. Nobody's indicator, nobody's thought, nobody's idea, no speech, no tweet. It all comes down to order flow. Now, we got to watch this number, 38.53. What's the high today? 38.53 half. What have I taught you about new highs that are minimal? Be very, very suspicious. If this thing does not close, now that we've taken out that swing high by 2 ticks, if we don't close above this high today, this session, that is very bearish, and you can anticipate a move to the downside. Where would we expect to find support? These 2 lows right here, potential support, and then the BBC. Now, when I say BBC, that means bull bear cross. It's the same on every market, every time frame. When price gets below that green line, we anticipate lower prices. When price gets above the green line, we're bullish, we anticipate higher prices. Lower prices, higher prices. And I need to refresh this chart. Every day, refresh your daily chart just so your indicators lay out properly. Now, every time price pulls back to the BBC, we expect it to hold until proven otherwise. Even on days like this where we spiked well below it, buyers came in and drove it back up before the close. So again and again and again until the big one. Now, you see how price started to walk sideways up here? That's an indication that top may be in place, even if it's a temporary top. So 38.53, we've taken that out by only 2 ticks. That's concerning. And then the all-time historic high is 38.62 1/4. So you should write that number down, 38.62 1/4. And even though we've taken it out by 2 ticks, write down 38.53, because if we don't close today above 38.53, that shows us or tells us that there's weakness in the market. Okay. Here's a little bit cleaner version of the daily chart. You can see there's that 24% fib where price dropped to, okay? And then finally found support right here. Resistance, support, support, support. Now, I still have the old Fibonacci price extensions on the chart we were just looking at. I put the new price extensions on this chart. And why new price extensions? Because we put in a new high and we had this pullback. So the way Fibonacci price extensions work, you connect the low to the high to the retracement low, and it projects these numbers into the future. Remember, it's just math, 14th century math, but math never changes. No politics, no pandemics, just math. So if we can take out the all-time historic high, overhead 3,900, that's the 38% Fibonacci price extension, then the 50, the 62, and on that daily chart we were just looking at, we saw price at each one of those levels this is when we were using this as the swing high. Now we're using this as the swing high. But you can see how price, it took days to get through the 24. And then it took days to get through the 38 and the 50 and the 62. Do I anticipate that same type of activity here? Absolutely. But we can't get ahead of ourselves. First, we got to take out the all-time historic high and hold it on a pullback. Okay, now let's jump to the 30-minute chart of the S&P. Garrett will be joining us here in about 15 minutes. Yellow lines are weekly trade zones from last week. The gray lines are this week. When price drops to a weekly trading zone, we expect it to be good support until proven otherwise. So once we got above this zone, 30.15.16, they're published Monday morning for our members at 6:15 a.m. Eastern. It held, and it held, and it held, and here we go. Now we've taken out those highs. Current high in place for the session we just talked about, 38.50. Now here's a great example of why it's important that you look at the daily chart. Whatever market you're trading, look at the daily chart, because the daily chart is going to give you important information that you won't find on the smaller time frame. All of our alerts are based on the 30-minute chart. In the morning in the room, we teach you on a fast time frame, on the range chart. But the alerts are based on a 30-minute chart. You would have, just looking at this, you'd have no way of knowing how important 38.53 was. I mean, on a 30-minute chart, you look left, nothing there, coach. What am I supposed to see? Today's high, 53.5. Its previous swing high, 53. All-time high, 62.25. Can't see that here. Now, you can also see things on the 30-minute chart, areas of support and resistance that you won't be able to see on the daily. So learning to use multiple time frames is something we're going to teach you. In the morning in the training room, Michael is just teaching you the basic strategy, making sure you learn that you've always got to use a hard stop. Once you start booking one-on-one mentoring sessions, once you start trading the alerts, then you'll come to me. We'll discuss multiple time frames. I'll teach you how to use them, okay? From the daily to the 30 to the 5. And as a larger time frame, Michael likes the 15-minute. There's nothing wrong with that. There is no magical time frame. You just need a larger time frame and a smaller time frame. You need to know what's going on in the bigger picture. So our daily tells us what an important thing just happened right here. Now, the logic alerts come out around the clock, 24/7, whenever opportunity presents itself. I also publish a static report every night shortly after the Globex Open, and that report is called the Concierge Trade Alerts. Last night I got them published at 6:45 p.m. Eastern. There's 2 numbers for each market. Okay, the long side's 38.45. So what you should do when that report comes out is you should go and put 2 lines on your chart. Put one at 38.45. And then the short side was 38.26. And 38.26 is, let's see now, what time did that come out? It came out at 6:45 p.m. Eastern. So it's going to be, I need the 1830 candle. Here, let me just draw my line. Now the 1830 candle is right there. Okay, so that little candle right there, that's during the life of that 30-minute candle that I published the Concierge Trade Alerts. So let me move this into place. $38.26, okay. It's hard to see, but it's sell 38.26. The other one, buy 38.45. Now, this is for guidance for the entire session. As price, and it was here on this candle, during this candle that the report came out. So the first move down, get rid of this rectangle. The first move down took us to 38.24.5. So we had a 1.5 point drop. Not unusual. The first time price approaches the CTA, that's an important price, important area. It may do exactly this, walk right up to it, turn around, back up, and then make a run, okay? So you put these lines on your chart so that you know, is the market currently bullish? Is it bearish? Should I anticipate higher prices, lower prices? So we had a bullish cross. Well, first we had this drop, which took us down to 38.15/16, which is a weekly trading zone. So from 26 to 38.16, that's a 10-point move, $50 a point, $500 per contract traded. Price got back above the trigger, dropped again, back above the trigger, dropped again. Now, not all triggers are created equal. On a short, you want to have red and fallen, okay? And so on this trigger, right, you would be selling right into support at the BBC and blue and climbing. So that's not one that you would trade. Here, you're also right at the BBC. Now price gets below it, and you could have gotten in once you got below the BBC, 38.24 down to 38.22, but I don't recommend that, right? You want this on a short, not this. On a long, you want this, okay? So 38.45, the first time it poked its head up, it went to 38.47 and a quarter. So there's 2 1/4 points. Price got back below the trigger, popped up again to 38.47, that's 2 points. And then it got back below the trigger again. So on the third trigger, it took us all the way up to 38.53 and a half so far. So that's 8.5 points, 8 points at $50 a point. It's $400 per contract traded. Now, we had logic alerts on the way up. This is again forward guidance for the entire session. It's sort of a big picture look. So as price is above the BBC and you've got blue and climbing, you can take long trades right on up to this number. But then right here at this number, you got to be very careful because the initial move above can get rejected. Just like the initial move here got rejected, right? But then when it makes that next attempt, well, you can see what happened there and you can see what happened there. Now, the next resistance overhead, last week's weekly trading zone, last week's zone, that's this week's highest weekly trading. Now, the highest zone, it's not a forecast that we're going to actually trade to that number. However, we've published them since December 14th of 2009. Most weeks, we will finish the week below the highest zone and above the lowest zone, okay? There are weeks that we close like, right at it. But you know what the market is trying to do at any given time. Right now, what's price trying to do is trying to get to the zone overhead. Price is always trying to get to a weekly zone. Over here, when price got above the zone at 38.15/16, we know it's trying to get to the zone overhead. And it did make it up to zone from last week. Price pulled back to the BBC. We expect it to hold. It holds more often than it doesn't. Gave us another leg, pull back to the BBC. Little pop, pull back, another leg. Now, once price right here gets below the BBC, well, the story changes. Now it's trying to get to the zone below, and it did. Price gets above, price gets below, price is now back above the BBC. And so it's a long way to this week's highest weekly zone, but that's where price is trying to go. So 38.45 up to 53.50, so 8 points. Let's jump to the Dow. That's the wrong Dow. Let's bring up a 30-minute. There we go. Now, I was in a mentoring session yesterday, and I always talk about swing highs, swing lows, and I'm really coming to understand that for a lot of people, figuring out where the swing high and swing low is a challenge. I've been looking at these charts for so long. Michael's been looking at them so long. It's really obvious for us. So I guess I want to find some kind of something to help you train your eye so that it becomes as obvious to you as it is to us. So what I did yesterday in the one-on-one session is I put these little circles. There's a swing high, there's a swing low. Swing high, swing low, 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 swing high, swing low. Anybody have any questions on that? Swing high, swing low, 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 swing high. Okay? It's really important that you and okay. That's the swing high. And from that swing high, there's the swing low. And from there, the swing high. And from there, the swing low. Okay? And that's how price works. When price can go no higher. Okay, like the swing high of this candle was 30,738. Why was that the high? Now, if you look at CNBC or any of these other places or read the Wall Street Journal, they'll give you all kinds of reasons why 30,738 was the high. But I'm going to tell you the truth. The reason the high was 30,738 is because nobody was willing to pay 30,739. Let that sink in, because that's the truth. The swing high was 30,738 because nobody was willing to pay 30,739. They hate it when I take the mystery out of it, because then they can't sell you all this garbage. But oops, I'm sorry, I didn't say garbage. But the Concierge Trade Alert for the Dow last night was 30,760. I hear a skill saw. You guys hear a skill saw? Maybe it's, I have my window open. Maybe that's it. 30,760. Okay, so the Concierge Trade Alert. As price starts to move up, you want to be long and or get long at 30,760, or only be looking for longs above 30,760. And so from 760, we went to the weekly zone overhead. That's this week's zone at 820, okay? From 760 to 820, that's 60 Dow points at $5 a point, $300 per contract traded. Now, see how price kind of sliced through that zone? When only three things happen at a zone, the most likely thing is consolidation, second most likely is rejection, third and least likely is the slice. And when price slices through a zone, this isn't a great example because usually when it slices, it'll, you'll have a big candle. But when it runs out of steam, it will do exactly what it did. It'll come back to the zone it sliced through and then continue in the direction of the slice. And that's what it did. So from 760 to 820 to the zone overhead, 60 points, $5 a point, $300 per contract traded. If you've earned the right to trade 3 contracts, then it's a $900 move. But it didn't stop there, it kept going up to 39.16. Let me check and see if Garrett is here. He comes in with a hot mic, so I believe he does. Let me look in the audience. I talked with him right before the show. Might be, I can look at gold if you'd like me to. We had an alert on gold to be short, so I'll go take a look at it. I'm just looking to see is Garrett here. Valerie, if you can keep an eye out for him. I think he comes in with his mic hot. So Mike B in the audience just said, do you see gold down to 1,070? Is that the question? Let's just go look at it, since you've got a question. Okay. Our lowest weekly trading zone this week for gold is 17. That's last week's zone. The lowest zone this week is 1762. Okay, and then the zone above that is 1820. Okay, and the zone above that is 1836/37. So as price got below the zone, it's below the BBC, we know price is trying to get to the zone below. So it went from the zone to the zone, from 1836 to 1820. That's a $1,600 per contract move. We expect the zone to be support until proven otherwise. So it consolidated here for an hour. It was support, and that support bounced it up to the BBC. When price moved to the BBC, we expect that to be good resistance, and it was. And it sent us back down to the zone. This time we sliced through the zone. And it happened, we retraced right back to the zone and the BBC. That right there. You should hang that in the Louvre. As a trader, that's one of the most beautiful things you could ever see. When price touches a weekly zone and the BBC at the same time, this happens. From 1820 down to where we're at 1785. That's $3,500 per contract traded. That zone to where we're at now. The CTA last night for gold was to be short 1832. Sell 1832. Okay, now from 1832 to the zone, that's 12 points. Well, the zone's actually 20/21. So from 32 to 21, that's 11 points. Gold pays $100 a point. So from here to here, that's an $1,100 per contract move. Found support at the zone. That's what we anticipate. Bounce, resistance, we anticipate that. On the way back down, the question is okay, will we consolidate again? Will we find support and head the other way? Or will we trade below the zone and try to get to the next zone below? Well, the next zone below is way down here at 1762. From 1832 to 1785, it's at about 50 points. Here, let's do the math. Math never changes. 1832 minus 1785 is 47 points at $100 a point, $4,700 per contract traded. A one contract trade. If you got short last night at the CTA, guess what? You just paid for your passport. One contract, one trade. However, if you're new, you should not be trading live. You should only be trading in your demo account in the simulator. Okay? It's really important. Don't think you're too clever for that. Don't think that applies to other people and not you. On the Russell, we went from zone to zone to zone. The CTA last night for the Russell, let me bring that back up. On the Russell, the CTA was to be long 2165. 21.65. Okay. Now, from 65 to the zone overhead, 10 points, $50 a point, $500 per contract traded. If you stayed with it all the way up to 2200, then that would be 35 points at $50 a point, but $1,700 per contract traded. Let's see, Mike has a question. Your first 1382 on the 30-minute would have been a stop out. Depends on what your stop loss is, Mike. You're asking about the gold chart. This, no, I don't foresee that being a stop out to sell 1382. No, it went down pretty as you please. To 1820/21, that's the zone. The candle in front, I'm not sure. You're talking about this candle? The swing low is 1832.1. So it didn't trigger until this candle. The swing low, if that's what you mean, swing low is 1832.1. So see, it came within one tick of triggering, but it didn't trigger on that candle. It triggered on this candle. Okay, got it. All right, where's Garrett? There you are. Garrett Jones. Hang on, let me get your mic open. You're self-muted, so you just need to unmute yourself on your end there, Garrett. I was just getting ready to pick up the phone and call you. Garrett, unmute yourself.
Did I do?
There you are. Now you're coming in loud and clear.
Yeah, am I coming in okay now?
Coming in hot. Yeah. How are you?
I'm good. How are you?
Good, man. I'm so sorry that I didn't see you the other day till after you had left.
Yeah, I had more stuff for you before. I had today's becoming a little challenged. Kind of a some busy things to do, so I got to be on quickly. I didn't have a chance to. I usually like to put together some charts and so forth. What do you? By the way, I was listening to you and what you were saying on the gold. You think it's going to make another move down into that 1700 area?
Let's go back and look at the chart. Here we go.
Looks like it's making a little edge there, doesn't it?
Here's what I think will happen is I think we'll get a little pop up to the BBC. We'll find resistance, and then we'll get another leg to the downside back into this area right here. So up
and probably a divergent signal.
We don't trade counter trend. All of the alerts that I put in the channel for all of our traders, like this. So like last week, which is week 130, I issued a total of 74 alerts, 13 never triggered, 61 actionable, 10% were stopped out based on not risking more than $300. But every one of those is a trend trade as we define trend on a 30-minute chart. So I won't issue an alert for the long up to resistance, but once price gets up there and starts to build the leg to the downside, then I will put out an alert. Every one of my alerts, and we just issued today alert number 6,412. Every one of those is a trend trade as we define trend on a 30-minute chart. So yeah, that's what I think will happen, whether it does or not. I don't know what's going to happen next. No one does. God in Genesis did not give Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. But boy, if you went to some of these websites on the internet where people are selling all this trading stuff, you'd sure think they'd outfoxed God and they could actually, tell the future, that they could actually know what's going to happen next. But we're very honest. We tell people that we don't. However, what we do know with a high degree of certainty, on average, 20% of the time, the market does something other than what we think it's going to do. And right now, what I think it's going to do is it's going to move up to here, give us a leg to the downside. And that narrative that I just gave you, 20% of the time, the market's going to actually do something other than what, and it's not just what I think, because I teach my method, my strategy, our indicators to all of our traders. So there's an army of people out there who are looking at this and thinking exactly what I'm thinking. See how this pulled up, right? It pulled up here, leg to the downside. Pulled up here, leg to the downside. Pull up here, leg to the downside. Now, eventually, price will pull up to the BBC and it won't hold and will trade on the other side. Then the market will start building legs to the upside. And so instead of selling the rally, we'll start buying the dip.
That's the BBC you called it?
Bull bear cross. And
there you go.
I can show you on a daily chart. When price is above the BBC, we're bullish, we anticipate higher prices. Then when price gets below it, we're bearish, we anticipate lower prices. Now, we had an interesting dynamic just a couple of days ago. Let me show you this. I know that you'll be able to appreciate it. Not that the rest of the audience can't appreciate it, but you'll really appreciate it. Okay. On this day, November the 3rd, you see how we closed the session below the BBC?
Yes.
Right there. We did not close below the BBC again until January 27th. From November, starting with November 4th, we closed above, and every pullback on the daily chart, it held, it held, it held, it held, it held. It holds more often than it doesn't. Finally, on January 27th, we closed below it. We dropped to the 24% fib. We bounced 30 points. And then the next session opened. We came down, hit the 24% fib again, and we bounced. And then we kept going, and we hit red and falling up here, which is resistance. And when we hit that resistance, down we came to the swing low that we had highlighted right here. We connected, this high to this low to this low. That's where the market found support. Now today, we have put in we've taken out the high, Garrett, of this candle right here. This high is 38.53. The high today is 38.55.50. So now we've actually taken it out by 2.5 points. I was concerned earlier because we'd only taken it out by 2 ticks. And I'm always suspicious of new highs and new lows that are minimal. That's a big red warning flag for me. Now,
yeah,
you want me to send you the charts?
Yeah, they used to call that, I can't remember, I think Linda Bradford Raschke had a something that she called turtle soup, which is just what you're talking about. They had a group, the futures traders called the Turtles. You remember that? Richard?
Yeah, I've heard about them. I haven't ever read any of their books, but they were quite famous. This guy took a bunch of ordinary, average people and taught them how to be traders. Isn't that how the story goes?
Richard Dennis is the guy, and a number of the traders became, made a lot of money. And so what they did, for the most part, is that they would play breakouts. So if the market broke out, they'd buy it, and if the market broke down, they'd sell it. And the turtle soup, Linda Bradford Raschke's observation and methodology, she says turtle soup is just what you said. When you get you said you're suspicious of breakouts that don't do much. And she noticed that when you had a breakout like that, lots of times it was there. You're expecting all the buyers to come in, they don't, and then they just turn it around and and you break down. And she called that turtle soup because, again, the turtles were all waiting for that breakout to buy. So when it didn't do that, it was turtle soup. So there's
Gotcha. Are you gonna take the charts?
Sure, and I'll be underwhelming because normally I have you know, something exciting for you here, or at least
You're always exciting. We always look forward to you.
I was just messing around with making a chart here. Let's see. Let's see what I should do. Did we get the screen yet? I need to move
I
that.
see part of your chart.
Let's
see
do that.
The whole chart.
Now let me see if I can move the little deal where. Yeah. Okay. Good. I just moved over.
I'm gonna hit mute on my end for just a second. You keep going. I've got to grab this call, but I'll be right back.
All right. Okay, what we're looking here that I normally label for everybody is the S&P cash index, the SPX. And what I have is my own indicator down below, and I just drew in what I think are kind of some obvious trend lines. Here's the low in March coming through the next meaningful low in late October and coming out here. This line is just paralleled off that line. Basically, what I want to determine here is price angle, the legitimacy of the price angle. Is price falling or adhering to this line or respecting it and bouncing off it one way or the other? So with the second line here, I'm seeing price come down to it here. Same thing here, broke through it a little bit, went above it, came down to it here, went below it, came back up. And we've hugged this now for really 3 months. I mean, we've been right around this line. And once again, not only are we right around it now, we're right on it. This is my indicator that essentially is showing buying pressure. So you're coming off this low, you get a pretty good amount of buying pressure coming up here. And then while you're moving along here, you're consistently moving, you're consistently making higher prices, but you're doing it in kind of an uninspiring way, at least with respect to buying pressure. Probably you're getting a lot of days here, maybe where you have more declines than advances or more declining volume than advancing volume, but you're going up in general. What's happened here recently is interesting because here, for me, I'll get a buy signal here. When these bars start to get longer is one way, or when they're negative here, when they start to get shorter. And when this line here is flat is when you get a turn. So right in here, you get a buy and it comes up and then it starts to roll over here. And you get these two correction there, and then this one, and here you've got, if I just take the horizontal line, you've got yourself not much of a divergence, but you've got kind of the same buying pressure here where the market's gone a little bit higher. So vis-a-vis this point before, you know, your buying pressure is not quite what you'd expect here. It isn't larger. And naturally, if this were obviously smaller, it would be a divergence, and that would be a pretty good signal. But it's a pretty good signal anyhow. You got a turn here. I wrote an update to clients or an observations, I don't remember which one, on the 20th here, right up here, just because things started to look stretched out to me on the short term, and we stayed here. Didn't go much more than 1/4% higher from this first point here, if you can see that, for the next 3 or 4 days, and then it dropped and lost about 4.5% down to this low. To me, that's a shot across the bow. You've got a pattern here that's very similar to here. You've got this move here, and then it ran up and then came down. You've got the same kind of a elongated pattern here with not a whole lot of ups and downs. So here we've got this correction here, and we've moved up in kind of a snappy manner in the last 3 days. Someone told me today, I didn't have a chance to confirm it, but he said that the VIX had dropped faster than at any other 3 days before in history. Anyway, and I'll take a look at that. I can jump in there and we can take a look and see what it's doing. This line here I just took because this is major top in February leading into this March low. So I drew a trend line from here through the recent highs, and it just looks like up around here you make a slightly higher high. You've got what would be a fifth wave, and the odds are that you probably complete this move sometime coming up. On my indicator, does that indicate that that might be the case? Well, yeah, it does, because if I blow this up here, if you see where we are here, and let me go ahead and blow that up. This point here, right in here, is kind of the high point corresponding with a prior buy over here. Then this has been dropping down. So we're coming up here now, and there's quite a bit of room. Let me just put a horizontal line in here so you can see it. This level up here, basically, let's call it 100. Down here, we're at 58. So I mean, it doesn't look like much, but percentage-wise, we're down quite a bit. So if we were to run out of steam here, which I think we might, then we would roll over and we'd have we'd get up to a higher high than these prior highs. Here, let me get back out of here.
Okay, I just figured out a problem we've been having for a couple days, which was my audio on YouTube. So Valerie will need to upload your recording again today, like we did yesterday. And to all of you listening via YouTube, I apologize, but at least I found the problem.
Ah, good.
Excellent.
Always good to find a problem, huh? Or I mean,
Man.
to solve a problem.
To solve,
Let me ask
exactly.
this guy.
Hopefully they're both good. If there's a problem, you do want to find it.
Oh, it's so frustrating. Well, what's even worse is when you're trying to fix a problem and you do something that fixes it, but you don't know what it was you did that fixed it.
Yeah, that's like
really
me
frustrating.
it's like me when I misplace something important. When I finally find it, invariably it's in a very logical space that makes very good sense once I know where it is, and then I remember why I put it there and why it made such good sense. The problem, of course, is when you can't find it. I don't go through that same logical process, I guess.
Do you know why? You know how when you're looking for something, it's always in the last place you look? Do you know why it's always in the last place you look? Because you stop looking.
Oh, yeah. Because you don't need to look anymore once you find it, huh?
No need to look anymore. All right.
We've got a potential divergence setting up here. Now, it's interesting, and this is a pretty good divergence. And this could imply a pretty good move to the downside. If you go back here to February, you've got an elongated move like this with not a whole lot of ups and downs, exception for here and then a little bit after that. Well, look at this here. You've got kind of the same thing, and then you have this situation, which might be kind of like this one, and then you come up and roll over. Here you've got two, let me put this in again. You've got, now this one happened to be a divergence. I can see it. Normally I'd blow this up and it would be much more visible, but you do have a divergent sell signal here, and that's a good place to have one because you get short right here. But you've got similar amount of buying pressure here to here. This is a divergence, but it's not much of one. However, apparently you don't need much of one to get a big move, do you? So here you've got a similar thing. Your momentum line here is kind of flattened out. This one flattened out, dropped down, came back up and flattened out. This one here is flat, you know, dropped down. You can't see it much here. Came back up and flattened out, and you know, here we are. Now we're possibly setting up a bigger divergence, maybe a much bigger divergence than this one right here, with a very similar looking pattern, same type of movement, elongated, you know, drawn out. This market's never going to correct type of move. So it, you know, we're trying to read the tea leaves here, but that's kind of an interesting way to look at it. Now on this, let me see if I've got this on this group of charts. There's something in here I wanted to look at. I just was wondering, let me just see if I happen to have that chart here, if it pops out at me. No, it doesn't. I was looking for my my AD line. Here's another situation while I'm bouncing around here like a nut. This is my 65-minute chart on this, and you've had this down channel from this prior high, and I think we're going to challenge this high. This is the 3870 high. We're 3862 and change now, very, very close to that. And maybe on a closing basis on one of these lines, we may be at a new high. So we're really set up for rolling over if that's what we're going to do. This is continuing on up, so it's saying not yet, and these three lines are continuing on up, and they're saying the same thing. We're starting to roll over here, so it looks like we might be setting up for something here. It's I wanted to show you on the AD line, but I don't have that chart handy. The other thing we were going to look at, and let me move these things back a little bit, is the VIX. And the VIX apparently, according to this, here, let me blow that up. From what I was told, in the last 3 days, this is the biggest 3-day move in the VIX from here to here. And that just seems hard for me to believe. I mean, maybe percentage-wise, you know, you got a pretty good move here, don't you? So, like I say, I didn't get in and break it down, but it's interesting to note whether that's the largest or not. It's pretty significant, and it's gone from up here at probably, what is it, 38 or something like that. Yeah, it's up here. What is it? Yeah, let's call it 38, down to about 22 and change. So that's a pretty good drop. You're down now into this base of VIX, its support level, where VIX has been for a long time. In order to get a true VIX sell signal, you need to break through this trend line and then come back and close inside of it. And right now, that's a pretty long ways away. So it doesn't have to happen. You don't have, the reality is, in a bull market, as long as it's a bull market, the signals that work for you are the ones that break out on the upside and then come back inside, like here. Here you can see where the line is down here. There's your buy. Come to this one here when it comes back inside, about there. Mm-hmm. What's that? It's a bottom. What about when you're back inside here, about there? An initial bottom. At least you got a bounce or two. Granted, it went up for a few days and then it went down, but you know, you gotta watch for that. Once again, over here, out, back in. I usually use a line on close instead of a bar chart for that, because you can see it much easier. But again, you're buying a bottom when that happens, and here's some minor ones that do these, and another one. Here's another one right here, which set up our last low. So we're moving down in the other direction. We're coming down pretty close to what's been support in this market. Oh, you know, all the way back to the middle of last year. We haven't really got down below this. So So we'll see. So that's VIX. Let's go to this is my daily chart, and it's interesting. I just took these two highs. This is the early June high with, I believe this is September 2nd high, and connected that line, and then paralleled this off what was the late June low. And I've kept that line on there. Initially, we came over here and broke it and came back and rallied into it. But as long as I've kept the line on, what's interesting is that prices have, this is kind of the, the line of the path of least resistance. Price seems to come back to hang around this line. I mean, you break it here, you come back to it. You come up away from it, you come back to it. You break it down, you come back to it. And this is the point along this line that it's coming back to. It's not some other point here or there. This is really, for whatever reason, over this period of time, the line that's attracted price. And as you see today, you look back at this 3 or 4 days ago and you go, well, it's not attracting it now, is it? But the next day you go, well, here we go right up to that line again. So one of these days, this is going to break. We do have a setup for the divergence here. This is relative strength here. We've got a setup for relative strength. But until this decides to turn back around, this doesn't mean much. It's just something to be aware of. If we look at the bigger picture, I mean, here's the what did I do? Here's the top-down approach. Here's the monthly, and this is kind of the for me, it's the true support line. That catches these lows, comes in and catches this low. This one broke through it, of course, but this was kind of the price angle that's kind of held this market from 2009 really up into the beginning of 2020, when we had our fall there. Now we've gone up above it, and what should happen here is one or two things. So well, one of three things. One is it just keeps going, and they keep creating money, and nobody sells, and we get complacency forever. That's a possibility, but not a probability, I don't think. I think the higher probabilities are that you actually top here, because amidst all the money that's being created, there's a massive amount of negatives that are, they're too broad, they're obvious and too
From
broad.
politics to pandemics, yeah.
Yeah, and the one that everybody forgets, which history says is the one that really counts, and that's debt. Debt. Sooner or later, even if you got a printing press, you're gonna pay the price. You're gonna pay the price by ruining your currency, or getting your currency to the point where nobody even wants it, or what could come up soon. Even if it isn't with our country, with a number of the other countries, they may go on to a currency that is backed by something. And if they do, then you've got a world situation where, hey, we've got a currency over here, we've got a banking system here, it's actually backed by something. And America says, oh, well, no, our Fed says, no, we're just going to continue to play this fiat money games, worked for a long time. If and when that happens, I will tell you one thing, it won't work for a long time. That'll be a past tense comment. So you could have a top here that is the top, and you come down here. But the one thing that you really do to have happen sooner or later, and I'm thinking sooner, is at least a correction down to this line. This is what you broke out of. You broke out of it here, couldn't hold it. You broke out of it here, couldn't hold it. You broke out of it here, and you are holding it. So it's due to at least come down and test this area, and this area at the moment is 3,400, and she called 3,500.
That's what you're looking at here is the S&P cash index. This is not futures.
Yes, exactly. So that's the monthly, and the monthly saying, oh, by the way, look how overbought we are. I mean, we've got an entire bull market, arguably the longest bull market in history. It's been overbought at various times. 2011 was one. Here it is. Here's the buying pressure there. 2015 is another one. Obviously, the beginning of 2018 was pretty much historic, and so was September, October at that time period. So these levels are, here's a big level here after a long movement. That was quite a correction, although it doesn't look like it compared to now, but it was quite the deal. There's the buying pressure there, this horizontal line. We got above it here, got a little bit above it here, but not much. And here we're probably, at this one here, well, we're still above it a little bit here at this top in February of last year. So these were significant tops. This was really the most overbought in this bull market here. And we're up again here and up again here, and holy smokes, what's happening here? I mean, we're well above what is, here are some significantly overbought levels, and here we are significantly above that. So this is a time when things are happening that haven't happened before. I mean, this entire bull market, you didn't see another bull market that had quantitative easing or zero interest rate policy for that matter. So these are two factors that are the kindest thing ever given to any president and the worst thing given to any of the citizens. It doesn't look like it because it creates a bull market, and people make a lot of money if they're the ones fortunate enough to be trading that. But they're setting themselves up for something that history says isn't fun. And if you knew what the outcome was ahead of time, you wouldn't make that trade-off. Anyway, we're going to find out. But we're getting remarkably overstretched at this level. But we were remarkably overstretched here, and we've gone up for too much. So who's to say when this is going to top? What I do is take a look at this and go, everything's going up. I got a buy signal on the monthly, nothing saying sell. I'm on a buy signal from back here, which is whatever it was, April of, right after the March low.
The S&P, the cash market, the S&P cash, the all-time historic high is 3870.
Is what?
38. What you're showing here, the S&P 500, the cash market, the all-time historic intraday high,
right there,
is 3870.90.
Yeah, it's just 8
and we're
points
sitting at
away.
3862 right now and change. We just hit 3863.
Yeah, so we're very close. And
guys,
once
futures follow stocks. The S&P cash index, what Garrett is showing you right here, this stops moving at 4 p.m. Eastern when stocks stop trading. Futures continue trading, but stocks stop, and this index stops. This is why when you look at an S&P cash index chart, you see gaps almost every day because it's not including what happened overnight during the Globex session. When you look at a futures chart, that includes the Globex session. So it's much smoother. In fact, on the S&P futures, about the only time we see gaps are Sunday night after the market's been closed for a day and a half. And occasionally in earnings season, we'll see a slight gap when we reopen, like today's the Thursday session. Today's session will end at 5 p.m. Eastern. And then tonight at 6 p.m. Eastern, that will begin the Friday session. And that will continue right on up until 5 p.m. Eastern tomorrow. And then that will end the week. And then we'll crank back up, start a new week, Sunday night, 6 p.m. Eastern.
Right. And this one here is the weekly. On the monthly, you know, we didn't have anything saying, you know, we're on a buy signal. It's still on a buy signal. Nothing's saying sell. Again, you don't want to trade off a monthly chart because it's a monthly chart. So you don't complete your bar that you draw on the chart until the end of the month. So lots of things can happen in a 30-day time period or any part of that. So
I teach all of my traders to start each trading session by going to the daily chart of the S&P 500 and determining where the major support and resistance is on the daily. And then we drop down to the 30-minute, which is what all of our trades and alerts are based on. But what Garrett is explaining to you here, that's taking what I teach you every day another step, okay? If the daily gives you information you can't find on the 30-minute because it's a higher altitude observation, the weekly steps it up one more notch, and then the monthly that he was just showing you takes it up even another notch. So here we're on the weekly.
yeah, and what I was going to say on the monthly, my buy signal came in April, which is fine. But if you come down to the weekly, you use each lower period to kind of fine tune, and they'll usually be a benefit not only in getting out earlier, but getting in earlier as well. On a weekly here, I do get a signal that's going to catch this whole decline. So that's kind of cool to be able to get in that early on a weekly. It's not a I don't think this is a divergent sell here, so it's kind of tricky. That's why when these lines flatten out, you watch, in my case, for my bar to drop down here, and there's my signal. I want to see a confirmation with the crossover here and other things that I look at. Same thing on this. I want my fast red line here, you know, down turning to confirm it fairly quickly. If I use the line for a crossover, I buy here. If I use my own system, I start to see these internal, well, we're coming down hard here. I want this line to flatten before I get a true signal. Sometimes I'll get a signal. Notice I get a crossover down here. I have the internals here coming, you know, they're starting to go in the other direction. So it's at this point here, I start thinking, well, you know, watch it now. We're getting pretty well overdone here. We're probably going to get ourselves, you know, a buy here. Plus, we're getting a waterfall decline, and they don't usually last for more than 3 days. So, you know, you've been around for a while. You get an awareness of this stuff. When it comes down here, I'll just look for, you know, a breaking of the prior high. And if I've got stuff here and my indicators come in, I've got a buy signal here. Now, my point was in my monthly chart, I had to wait till April to buy. This one here has me buying, well, the weekly is also April because it was, you know, the bottom was, I think, what, May 23rd, the week of May 23rd. So anyway, it was the next week. You know, you're getting in a little bit earlier. Let's go down to the daily and see how that works. Anyway, you look at both of these and you see where you are. Let's see. I'm going to have to go back here a little bit. Oops, look at that. Let's see if we can. Here. Here's our low. Now on this one, again, it's a different setup. Same thing. These are both at about the same time, but here I get my signal here. So now I got a couple of days leeway. I'm ahead of the curve a little bit. I've got a divergent sell signal down here, as they say right there, where the signal is. My lines are flattening, you know, momentum's losing. So you don't know whether it's going to go down here. You just, you know, kind of you're taking a bet based on your indicators. we're anticipating a turn in this case, rather than having the market trend and tell you that, okay, we're going in that direction now. So what happens here, we come out, now we're getting a crossover on these, everything's turning down, same thing down here, same thing down here. On these declines, you can get oversold on a daily pretty quickly down here with the RSI. And that's a bottom, but it's not the bottom. Typically you get a 2 or 3 day rally and then you go back in there. Watch this yellow line as a true trend indicator, and as long as the red one is underneath it, you're okay. Here's where I might be able to make my point on, you go to smaller and smaller time frames to improve your timing, your entry and your exit for this matter. In this case, we're shorting, so the entries here, we're looking for an exit down here as opposed to the normal I bought here and I'm going to sell here. Here, you come down with your low, and on my indicator, it's very clear.
You need to get that?
If you hang on just a second.
Yeah, no, go ahead. Now, when I take the charts back here in a few minutes, guys, I will show you. I just posted it in Telegram. It's a daily chart of DOGE, Dogecoin. We put in a high today. What's the high?
Right.
About 5 cents. We came just shy of 6 cents. Many of you bought this when it was below a penny, and then I know a lot of you came in between 2 and 3 cents. So right now, we're just shy of 5 cents. Go ahead, Gary.
Anyway, this all is coming down here. There's a quick turn in the red line right there, and that's an important one. And this was a low, and we gapped above that on there. And since we've been washing out, that's a good place to take a shot anyhow. Plus, I've got signals. I've got a legitimate signal here. This line is flattened. This bar is shortest. That's a buy signal. And that happens when? Before we were in April. And here, we're on March 24th, the day after the low. So when you come down to a smaller time frame, it gives you that opportunity to make your entry earlier than you would otherwise. While we're at it, let's see what's going on at the moment. And then I'm going to have to run. I apologize, but okay, here's where we are now. Same thing. We've come up to this line. This is where we started. So we've come up there. We're close to the upper Bollinger Band too. So this is something to kind of look for. So we've, you see in this upper Bollinger Band, you don't go above that and stay above it for long. Here's a quick move, a reversal, but it's hard to find. Here's a spot here, but we're getting very close to that right now. If I go down here, let's see, we've got, this is a 65 minute. A couple of these charts are kind of interesting. These are just kind of a band that shows that, it's a 15% band above and below price. And that's a pretty good spread. Down here on the initial collapse after, well, here's the 2018 top at that band. It comes down, it rallies up, it spikes down, goes down to the other band. Here, you're not quite at it, didn't quite make it. And here, with the extreme selling that happened leading into that March low, you go above it, but you don't stay below. You go below it, but you don't stay below it for long. And now you're back up at it again. And arguably, you make the argument, well, you're here, you're up at it here too. So now you're here, and this is going kind of vertical at this point. So it's pretty it's pretty crazy. It just shows that you know, we're at an extreme, and you know, typically you don't stay there for long. Here's another thing that's kind of interesting. Here's a huge megaphone pattern with the obvious sell-offs and down here. I mean, this is a class. You can use this one in a textbook. It's just an outstanding megaphone pattern. Here we've come back up to it, and now from this point here, we've got a new channel that's even more aggressive and is broken out of an already super aggressive megaphone. So again, this is pretty crazy stuff. This is unique to a late cycle, debt-ridden time period that's anything but normalcy. I mean, that's the reality of where we are. What else was I going to show you real quickly? Some of these, well, here you are with your Bollinger Band on a closing basis. So we're even on a closing basis, we're getting close. You've got, this happens to be a CCI average on the daily, but look at this, you know, lower high, and at least so far lower high. You turn down here, you know, these are not confirming the new higher highs. This is a McClellan oscillator. It's now got up to 78. It was very negative here, down around minus 200, and probably shouldn't go a whole heck of a lot more than that. Generally, you know, I want to see it at 150 or 200, you know, just if you look at it all by itself. The 10-day AD line is now gotten back to, you know, 208, and it was down at minus 500. Normally, I like to see this at about 400, but again, we've already done that. We've already, you know, you know, things are mixed now because of a great deal of rotation that's been going on in the market. Then on this one here, this is the same thing. These are the dailies over here. We're set up for a divergent sell signal possibility here. And again, it's much easier to see when I blow it up. We're not overbought here, but we were extremely overbought here. And this, until proven otherwise, is kind of a reflex rally. We're rolling over here. These sell signals are given on a crossover here. I don't know whether we're going to cross over or not, but we're certainly headed in that direction. This is the hourly, so it's fast. I'm set up for a sell signal here. We're up in the rare area, in the thin air here, and we're not overbought necessarily on the RSI yet, but we're getting close. So anyway, it's a time to be, you know, I mean, it's a time to either be taking profits or putting stops in, you know, letting the market take that profit for you. But anyhow, on short notice, without having any prepared charts, we got a chance to do a couple of things anyhow. So anyway, I better run here on my end, but thank you for letting me share time with your people.
I'm sorry, what was that last thing you said? I had to take my headset off just a second.
Oh, I just said I've probably got to take off here, but thank you for letting me share time with your audience. I did have, you know, since we've got the Christian Financial Network here, I used a couple of quotes, and they might be kind of interesting. Let me see if I can. Let me see if I can grab that.
Latest observations?
Yeah, I do have a latest observations that I haven't finished, but I think this one is the most.
If you will get Telegram installed so that you and I can start communicating in Telegram, let me teach you how to use it. It's really very simple. And we'll set up an observations channel that you can invite everybody to use, because while not everybody's using it yet, eventually everybody will be using it. We've been using it for years, and it just works flawlessly. It's free, it's fast, it's secure. There's no advertising. No commercials, no pop-ups, no banners, none of that garbage.
I'm going to do some stuff in my observations. The most successful newsletter I think of all time was Dow Theory Letters by Richard Russell, who I knew, and he passed away a number of years ago. But he wrote a great letter. People enjoyed it, and I want to put some things in this in addition to market stuff. I make some comments. I try not to be political because I don't particularly like the direction that politics has gone on either side.
Right.
But I do make some connections. I'm going to slow down on that, but I'll show you the kind of, it's observations. So I'm making observations, and one of the things that I wanted to add on my newsletter because I think it's I've got some things that I can share with people that are just of general interest, health situations, things about COVID that people might not find elsewhere, information of things that might be helpful. It's, you know, none of it's going to be medical advice or anything. It's just stuff to take a look at. You know, the doctors had come on and talked about taking hydroxychloroquine and vitamin D3 and C and K2, et cetera, and zinc. And that certainly doing a lot more than what had been happening otherwise. And then in addition to that, I don't know whether most people heard this or not, but one of the doctors who had been on and with a very good group, and I think his group has studied this virus a lot more than most others. And he said, if you take ivermectin, you will not get the COVID virus. And there was a study of 800 healthcare workers who were exposed to it every day who took ivermectin. Of that 800, 0 of them came down with the virus. Of the the test group that didn't take the ivermectin, 58% of them came down with the virus. So it's like, you know, don't ask me, there's the numbers, make up your own mind. I would think it would be obvious, but everybody's got their own way of looking at things. Speaking of looking at things, I put this on there. That's our friend AOC, lovely gal. That's a lemming, and that's a tolerant liberal. I find a lot of them to be similar to that. You can make them do that. You can say things like, "Oh, Donald Trump, that'll do it," and you know, other things. White people. That oddly enough, she's a white person, but we know that if you're a white person in America, you know, you've probably done something wrong. Moving along, on my prior observations, I had this on the front page.
Yeah, I remember that.
Signified complacency. And shortly thereafter, we had a 4.5% correction. And it's kind of, for most people, most of the people who are playing now have never seen a bear market, and they, just like in the dot-com bubble, you had a lot of people who'd never seen a bear market. So 4.5% correction, that's a buying opportunity, and it is. You know, it is. It was a buying opportunity. So until it isn't, it is. You know, as we move along, I wanted to get to the part on the Bible, but I won't spend too much time here. But this says these people are protesting because they say a billionaire president who is actually keeping his campaign promises is mentally unstable. There was a time in America when this would have been odd and maybe mentally unstable, but apparently it's not anymore. What's odd now, and actually dangerous terrorists, they kind of look like this, at least according to these people. Anyway, my point, without delving on that, I'll move that out of the way. My point is that I've noticed and brought up in observations for a long time that, to me, I'm doing the observing and my observations thing. Things have seemed upside down to me for quite a while, and now they're just getting even more upside down to a degree that's difficult for me to imagine. But I was looking around in the Bible. I'd made the comment to people that, some people are, I'm not a great Bible researcher. People are a lot better than I at getting verses and who did them and when they happened. I got to look it up. But I knew there was something about when good becomes evil and evil becomes good. It's bad to be a patriot. It's good to be an anarchist. It's bad to be conservative. It's good to be crazy, etc. But I found this. I hate to say things and then not be able to back it up with why I said it. And in Isaiah 5:20, it says, "Woe to those who call evil good and good evil, who put darkness for light and light for darkness, who put bitter for sweet and sweet for bitter." And I thought, well, there it is. And then I dug around a little bit more. I said, there it is. And if those are the messages that were brought out, I said, it looks to me like that's happening right now. And woe to those, as I don't want to be on that side of the equation. So
Right.
am I taking a warning? You bet I am. Here in Timothy 3:1-5, it says, look at this, but understand this, then in the last days there will come times of difficulty, for people will be lovers of self, lovers of money, proud, arrogant, abusive, disobedient to their parents, ungrateful, unholy, heartless, unappeasable, slanderous, without self-control, brutal, not good, treacherous, reckless, swollen with conceit, lovers of pleasure rather than lovers of God, having the appearance of godliness but denying its power. Avoid such people. I'm going like, wow, that's getting pretty specific. And I'm thinking, I have no doubt that nothing I write will be around in 2,000 years, but Tim here and Isaiah, their stuff has lasted for a couple thousand years, and it not only that, they've done an awfully good job of defining, at least in my view, what's going on, and that's I thought I needed to put that in there because some things are obvious, and what I've noticed is when you're in this part of the cycle. When you're in the part of the cycle that we are, and when the part of the cycle where this kind of stuff is happening, the people that are in there don't realize it, and it's very easy to figure. I think it's part of our DNA that if you're part of this and you get caught up in that, and we call it brainwashing or whatever, I mean, because it is, but the people that get caught up in that, all of us, for the most part, I think everybody I know, who has at least a decent sized family, you've got people split on both sides, within your own family and within your group of friends.
Sure.
And many people, I've heard this from many people, they've lost lifelong friendships due to political differences. That's insane.
Yep. Yeah, it is.
I asked somebody, I said, let me ask you this. I said, if I like Biden or if I like Trump, and you like the other person, and we've been friends for 35 years. I said, are you saying that you don't want to be my friend anymore? Because I said, let me get this right. I said, does Joe Biden like you better than I like you? Are you getting calls from Joe? Is that what's going on? Is Joe calling you, sending you gifts, buying you cars? If that's happening, I'm kind of going like, well, gee, I would hate that would break our friendship, but at least I could make an argument in your favor. But I said, if you don't know Joe or Donald Trump, I don't care, whichever side. I said, if you don't know,
this QAnon thing has also been very divisive. Families, friendships, all kinds of things have been. And if people would just invest the time to learn the truth, Q, no one knows who Q originally was, but we all, those who care to know, all know now that Q is Ron Watkins. And I told this story the other day on the show here of the young man who was handicapped. I think that's probably not the politically correct term to use anymore. I'm not sure if it's disabled or what's proper, but
probably not using the politically correct term is actually the correct term to use. So
yeah, maybe. But he was disabled, and Ron Watkins plucked him out of obscurity and almost poverty in California and shipped him off to the Philippines. And it was in the Philippines that this young man wrote the software for 8chan, which became the home of Q and the whole QAnon conspiracy. And Ron Watkins actually took over the Q account. And I mean, it's all documented. There's a really great podcast called Reply All. And so wherever you get your pods, wherever your pods are cast, just go there, iTunes, Wondery, Spotify, iHeartRadio, pull up Reply All, and then scroll down into last year's episodes, and you'll see a couple of different episodes were dedicated to the QAnon conspiracy, and they actually talked to the guy who wrote the code for 8chan, who monitored all the servers, who did all the work. And if you listen to that and don't believe it's the truth, I'd really like to have a conversation with you. Because, you know, Garrett, you know how you can listen to somebody tell you something, and on a gut level, you just know it's true. And you also know on a gut level when something's not true.
what was he saying about the QAnon that was that it's just complete garbage or whatever?
Well, Q was supposedly some government official with the highest possible security clearance, which is the Q level security clearance. When I was a young man in the Navy, I had a top secret security clearance, but there's a clearance that's above that. It's the Q security clearance, which means you have access to everything. And originally, Q pretended to be this insider, this high-level government official, and he would do what are called, he would post things, they call them drops, Q drops. He would drop, and it was always in code, and it was always, oh gosh, it's just so crazy. But people would spend their whole day at their computer. They wouldn't go to work so that they could sit in front of their computer and stare at the screen.
If they don't do it,
for the next drop. I mean, this is where all the stuff originated about how, you know, after Biden got inaugurated, they were all the pedophiles were going to be arrested, and there was going to be public executions, and oh God, it just went on and on. And sadly, so many people, I have friends who believe it, who still believe it, because every time a prediction doesn't come to pass, well, the answer is, well, that's part of the plan. It's always about the plan.
I was going to say in John F. Kennedy Jr., I believe, came up in there too, that he might still be alive and so forth. And on those things, for me, I have no idea. But I'll tell you what I do keep an eye out for. I know what's been happening. The question here, it as I say so many times, it's nothing to do with Republicans and Democrats. If you looked at the last 4 presidents, there's no indication whatsoever that one's a Republican and one's a Democrat. All of them are globalists. Both Bushes and Barack Obama and Bill Clinton, they're all globalists. And
our capital is now a military stronghold. Does no one see that this is exactly what a tin-pot dictator does? When they take office, they surround themselves with the military, put up fences with barbed wire. I mean,
oh sure, yeah. But
my goodness.
You know, remember when we use these words are given to us by the news media. The first one was liberal. Liberal is a great word. I don't consider myself a liberal, but I consider myself liberal in the sense that
I'm open-minded. I think that's what it was supposed to convey, you know, going back to the hippie days. I'm very open-minded, you know. I'm willing to look at both sides of any argument.
Yeah,
but put myself in the other fellow's shoes. Go ahead.
Isn't it interesting that it's really the libertarians and the conservatives who are the ones that are open-minded. In other words, we're the libertarians and the conservatives, forget the party, are the open-minded ones. They are not trying to, you know, we've done this before, but let's take guns, for example. First of all, it's a Second Amendment right, which was created when you had wise people create things, and they created those things because they came out of extreme oppression and they got away from it. That's why and how people created a republic, and that's why and how they use the law of the land as opposed to the rule of the majority. Why is the law of the land better than the rule of majority? Because the law of the land is written by people who have come out of extreme oppression whenever you get a republic, and created it based on that. And they had the knowledge and the forethought to understand that rule of the majority is a bad thing when you have bad leaders. You know, what happens if the majority is crazy? Hang on 1 second, okay?
Go ahead. I'm posting in the Breeze channel
Can you hang on just a second?
on Telegram
Just 1
a
second.
link to Gimlet Media. They produce the Reply All podcast.
Dwayne, can
Go
you
ahead.
send me that podcast link when you get
Yeah.
a chance?
Yeah, I sure will.
Hey,
You
I
bet.
apologize. I've got a call. I've got to take
No. You take off.
off. It's an offshore
coming
call.
on.
So
And then you and I
Uh,
need to talk. Maybe let's
yeah.
this afternoon. Give me a call if you got time.
okay. Thanks
right.
so much for having
All
me
right,
on
buddy.
your show. I
God bless.
love to get a chance to talk to your folks there. So
We enjoy it.
everybody
Always. Thanks.
have a good day and a good weekend when it comes.
All right, brother.
Thanks, Dwayne.
Bye-bye. All right, guys, we sit back at gold. Okay, this is the move that we're talking about in gold. We're still looking for our prices on top of the step line. So we look for a move up to the BBC, where we expect to find resistance, and then another leg to the downside. If price gets to the BBC and it doesn't hold as good resistance, it gets on the other side and then holds a pullback from above. The beautiful thing about futures, we'll trade it to the long side. Right now, we don't do anything. We're not going to take the counter trend trade. I'm not going to put out an alert on the counter trend move. And the reason is a trend trade has a much higher probability of being a profitable trade than a counter trend trade. Now, some people like counter trend trades. There's nothing wrong with them. They're not illegal, immoral, or fattening. They just don't have the same high probability that a trend trade does. Because with a trend, you've got, you know, the big bullish wind at your back. So we'll see what happens. Now, what if price doesn't move up to the BBC? What if instead price starts to deteriorate? Now, red and falling just became blue and climbing. So we would expect support, just as we expect resistance at the BBC, we expect support at blue and climbing. The price comes down and trades below, then we've got this big window of opportunity all the way down to the weekly trading zone. So no matter what happens, if we want to trade gold, we're covered. We just have to wait for the opportunity to present itself. When you want to sit down and trade, you know, a lot of people sometimes will say, oh, I just trade the S&P. Okay, nothing wrong with that. The S&P is not always setting up a high probability, low risk trade opportunity. So if it's not, then you just come back later. You keep watching it until it does give you the high probability, low risk trade setup. Now, Garrett's methodology. Garrett's been around a long time. He's been doing this a lot longer than I have. He comes from the Wall Street days, 70s. He worked for a couple of the big brokerage firms back in the day. Now, you saw a lot of charts, a lot of indicators, okay? Nothing wrong with any of that. All those indicators, I am sure, do exactly what they were created to do. And Garrett uses them all to arrive at his buying and selling decisions. We have simply made it a much simpler process. Now, we're not perfect by any stretch, because if you look here, on any given week, this week we've only had 6% stop out, but on an average week it's 20%. So our humble, simple method with just a couple of indicators and an understanding of how price moves and how markets work. Well, I don't know. I don't have to convince you, because the numbers are there. You know, if you want to learn how to trade, we'll teach you how to trade. We just won't teach you a complicated method of doing it. We'll teach you a simple, easy to understand method. Michael will teach you the mechanics of putting on and taking off trades in the morning. I'll provide you with a steady diet of high probability, low risk opportunities around the clock. You'll trade in the simulator. You'll use those alerts to put you in front of the chart, to put on and take off trades, till you get your 10 consecutive days in a row where you reach your goal in 10 trades or less. And then you go live, trading one contract. The goal is to increase your account balance by $2 grand, at which point you then add a second contract. I already explained earlier in the show that whole process. Now, the reason you don't just trade an alert because it's an alert is because we're trying to teach you how to find these opportunities yourself. So I just explained to you, there'll be an alert coming on goal, but I'm not going to put out a counter trend. I'm going to wait for price to either get to resistance, and then we'll have an alert to be short on the way back down to this area of support. If price gets above the BBC and holds the pullback on the other side, I'll put out an alert to go long. We only go long above the BBC. We only go short below. And what a beautiful example here. Leg, retrace, leg, retrace, leg. So there's nothing to do right now. Three things can happen. We pop up, find resistance, get another leg down. We pop up, get above, hold the pullback, and get a long trade. Or price drops through blue and climbing, and we trade this big area here down to the weekly trading zone, which would roughly be about 1782 to 1762. If that's how it unfolds, the alert I put in the channel, if this big rectangle, if that's the way it unfolds, then it'll be about a $2,000 per contract opportunity. There'll be an entry, an initial target, a second target, final target. Same thing over and over, again and again. We don't change our method every other day. We haven't changed anything really since 2008. It's been 8-9 years since we changed even a line of code in our indicators or any rules to our strategy. Michael started throwing in a little more information in the morning about stuff that he's thinking, okay, about how he looks at the DOM and sees, you know, what's on the buy side, what's on the sell side. But that's not anything that we've changed. He's thought way all along. He's just sharing his thoughts with you. So going back to where we were on the Concierge Trade Alerts from last night, if you didn't grab a screenshot at the beginning of the show, grab one real quick. Okay, we already covered the S&P, the Dow. I think we got the Russell. There's Crude, NQ. Now, this is the static report. This is the forward guidance for the entire session. Good for the entire session. The logic alerts come out around the clock as opportunity presents itself. In other words, let's say price does pop up to the BBC here on gold, and we find resistance, and we start building a leg to the downside. I will then put out an alert based on current price action. Logic alerts are based on current price action. Concierge alerts are based on historic price action. And watching the two come together to provide you with an opportunity. It's a beautiful thing. Okay, So we'll jump back to the S&P real quick. Okay, the CTA last night was to be long, 38.45, and we're almost up to last week's zone at 59. So at 59, that'll be 14 points. Yeah. On the Dow, CTA was to be long, 30,760. And the swing high so far is 30,915. So that's 140 points, $5 a point. The Russell CTA was to be long, 2165. And we've made it up to this week's zone at 2200. No, that's last week's zone. Yeah, that's the last, let's see, 21. Here, let me get these updated. 2146 is this week. Then the next one for this week is up at 2235. 2235. That's the highest weekly zone this week for the Russell. 2235. Okay. So this is a last week zone. So I'll make that yellow. Okay. And 2175, also last week. Important prices, important areas. Not only are they almost always tested, but this will remain important, as you can see here, for a period of time. When Monday morning rolls around and you put the new zones on your chart, we've published the zones since December 14th of 2009. Monday morning, put the new zones on your chart. You can color code the old zones, or you could just take them off, write them on a notepad. But you want to know, because look what happened when we hit last week's zone today. We got a retracement from 2200 back to 2190, 2191, yeah, 2190, oh, yeah. So it's a not, wouldn't it be nice to know that there's a, if you're trading this long, and maybe your plan is to, you know, stay in it as long as you can, maybe all the way up to the highest zone. Wouldn't it be nice to know that the reason price ground to a halt here is because it was last week's zone? So what did it do? It pulled back to blue and climbing. It found support. Now, here's an interesting dynamic. This is a long trade. You see how the step line is on the left side of blue and climbing, right? When a move starts to run out of steam, price will walk sideways, but the step line will go from the left side to the right side. Everybody see, left side, right side. This is a long trade. If this current candle, see that little red candle? If it closes below the step line, then the closing price of this candle will be the exit signal. Every extended move has an exit signal. If it's just a little small move, couple, 3, 4, 5 points, doesn't come into play. But a big move like now, think about this. If you were in this trade based off of a 30-minute chart, and if you understand that price needs to get on the right side of blue and climbing, step line needs to get on the right side for there to be a sizable retracement back to the BBC, price will eventually pull back to the BBC. It always does. Price always reverts to the mean. So if you're in this trade for the long haul, maybe you've reached the point where you want to take more than 2 points a day out of the market. You can make as much money as you want to make with 2 points by increasing the number of contracts you trade as you earn the right. But let's say you've decided that you're gonna, you know, go for the gusto here. There's no reason to get out of this trade anywhere along the way. You can, it's your trading business, you can get out anytime you want for any reason that you want. But if you're going to stay in beyond the target, now on this one, on this CTA at 2165, the final trade to target is way up there at 2235. Remember, on a long, the final trade to target is always the weekly zone overhead. On a short, it's the zone below. So let's say you decided I'm gonna see if I can stay in this thing all the way. If it goes all the way, okay. Now, what you don't want to see happen is you don't want to see price come all the way back here, you know, and turn a positive day to a negative day. And so a red close below this step line, now that it's crossed over, I'm going to say it again, on a long, okay, on an extended move, the step line will be on the left side of blue and climbing. Once it crosses over to the right side, pay attention. An exit signal may be coming. And our exit signal is when a red candle closes below the step line. So let's say the red candle closed at 21.96. That would be the market telling you, hey, you should probably take your profit here because there's a high probability the price is getting ready to pull back to the BBC. Price always reverts to the mean. And in our case, the mean just happens to be green. So from 65 up to where we are now, let's see, 2170, that would be 30, so it's 35 points so far. And the Russell pays $50 a point. You can do the math. That's per contract. Now, this candle may not close below the step line. You could still get out right now if you want. But what may happen is this candle, you can see buyers and sellers, they're duking it out. Who's more committed? If buyers decide we're having too hard a time moving this thing higher, so we're just going to stop buying for now, price will start to deteriorate. It takes financial commitment for markets to rise. All that it takes for price to drop is buyers to stop buying. So right here, price ran up to 2199.9. Nobody wanted to pay 22. And so price dropped to an area where it once again got buyers' attention. Buyers stepped in. This time they drove it up to 2200.8. Nobody wanted to pay 2200.9. If buyers stop buying, price will do exactly what it's doing. And it will drop. Now, let's say we close below the step line. Where do we expect there to be support? Initially, right there. Chart always tells you everything you need to know. You don't need to buy another course, watch another video, get another set of indicators. You don't need a new guru. You don't have to do anything weird, burn incense or candles or anything. All you need to know is how markets work, how price moves. Basically, we're price action traders. Our indicators, they just help you. They just make it easier for you to see what price is doing. And then we give you the understanding of why it's trying to do it. Okay. All right. So next is the NQ. Okay. We had this ascending price channel yesterday. We broke out of it last night. Did a trader Vic, came back, kissed the top of it, leg, retracement, leg. Okay. So we're out of this channel now. I'll probably take this channel off, but there will be a day, whether it's tomorrow or next week, where price will come back down to the top of this trend line. It will find support. It will bounce. It'll either re-enter the channel or not. But right now, from where we sit, this channel has no value to me, other than if I want to leave it on my chart, I'll know that days into the future, or hours, whichever, when it gets back to the top of that channel, that will be important. If it holds the support, I'll be going long. If it fails to be support, then we'll be looking for short trades. All right, CTA last night for the NQ is to be long 13,475. 13,475. Okay, now the swing high right here on this candle is 13,480. Okay, so it's $100. That little wick, that's $100. But basically, this is just what I showed you on the other one. Price walked up to the CTA number. Didn't like what it. Think prairie dog. This was a Mike Reed analogy. Prairie dogs, when they live underground. When they get ready to come out and do prairie dog stuff, they don't just come bounding out of the hole. They stick their head up. They look around. They don't like what they see. They burrow back down and then they pop up somewhere else. That happens at the CTA a lot. Okay. On the first approach, watch carefully, see what happens, see how price responds. The prairie dog came back down to the BBC, top of the channel, found support, popped up over here. And from the entry at 13,475, it popped up to 13,504. So 75, 25, about 35 points at $20 a point, $700 per contract traded. You've earned the right to trade 2 contracts, $1,400. Hopefully you see how simple this is, okay? I don't have to go look at a bunch of other charts. I don't have to look at any other markets. I don't have to. Now, I do recommend just if you trade X futures, you should daily chart of the S&P when you begin your session. But if you focus on the NQ or you focus on the Dow or focus on the Russell, okay, then go look at the daily of the market you trade. Then go to your 30-minute chart to find your trade setup, and then use the 3-step methodology that I teach you to position your stop loss. At no time do you want to risk more than $300 per contract per trade, less when possible. Okay. Okay, next on the list is crude oil. Okay, last night, concierge alert for crude. We wanted to be short 55.45, long 56.05. This alert, this report, good for the whole session, came out at 6:45 p.m. All right. And so the short side, 55.45. Okay. Sell 55.45 and swing low was 55.30. $150 per contract traded. 2 contracts, $300. 10 contracts, $1,500. Don't trade more contracts than you've earned the right to trade. Don't go live until you've earned the right to trade live. Can't stress that enough. 56.05 was the long side. Right there. Swing high right here was 56.05 on the nose. Trigger from 56.05, we go up to 56.58. So from 05 to 55, that's that move is $500 per contract. 2 contracts, $1,000. Okay, gold. We already covered gold. Last night's alert on gold was to be short 1832, and it took us all the way down to 1785. Here comes that move we've been waiting for. Now, because our method is fluid across all markets, all time frames, I could have made a decision to wait on crude to set up Or I could just go look at the S&P, the Dow, or the Russell, or the NQ, or crude, or silver. I just need to find a market that is giving us our signature trade setup that produces this kind of results right here. So far this week, 63 alerts, 13 never triggered, 3 waited, 47 actionable, 6% stopped out. The average is 20% stop out any given week. Now, over the last 131 weeks, we've issued 6,412. What's 20% of 6,412?
The answer is 1,282.4.
Okay, so out of 6,412 alerts over the last 131 weeks, we've seen 1,282 of those get stopped out based on not risking more than $300 per contract, per trade, less when possible. Let's see, Mike B asks, shouldn't the NQ catch up to the QQQ on the daily? Maybe you should rephrase that question. I'll take a look here at the NQ. See, there's where the NQ is. Now, oh, I said I was going to show you guys this. I will. Hang on. A lot of you have been trading Dodge with me and some of the other guys here. There's a 30-minute window of opportunity right here. This is on the 30-minute chart. Take it to the daily. Yeah, there's that little 30-minute window right there. Okay. But, you know, back to the beginning of the year, this was trading below a penny. It's run up to, what's the high? High is 7 cents, a little over 7 cents. And then it pulled back. Now we got another rally underway, and today it ran up to, what was today's high? Today's high was 0.0599. We call it 6 cents. Okay. Now, I'm sure somebody goes, hey, well, you know, I can't live off 6 cents, obviously. When price goes from 1 penny to 6 cents, what is the percentage gain?
I found this on the web.
I didn't ask for that. I need my Alexa back here. Imagine you had invested $1,000 in a stock valued at $5 per share and another $1,000 in a stock valued at $10 per share. That would give you 200 shares of the first stock and 100 shares of the second stock. After a year, assume the first stock's value increased by $5 per share, while the second stock's price increased by $8 per share. While the second stock increased by a greater price per share, it increased by a smaller percentage of the original price. The first stock went up 100%, while the second stock increased by 80%. If a stock goes up 100%, it's doubled in value. So in other words, when this went from, let's say you bought it at 1 penny. Okay, if you put in $10 and it went to 2 pennies, put in $100, and it went to 2 pennies. Now it's worth $200. You made $100. At 7 cents, 6-cent profit. The percentage gain, okay, is what's really important. Now, when you're dealing with penny stocks or even cryptocurrencies that have an extremely low value like this, okay, that's a highly speculative situation. So you're giving yourself the opportunity for these incredible type of gains, but the risk is increased as well. A lot of brokerage firms won't even talk to you about stocks that trade under $5. Some brokerage firms consider anything under $5 to be a penny stock, even if it's trading at $3.50. So the percentage gains that we see in cryptocurrency, yes, that is truly an opportunity to make an incredible percentage return. But the pendulum swings both ways. So, you know, you never put your mortgage money in something like this. Okay, you don't put your kids' college fund in something like this. However, if you have money set aside for speculative type investments, the world has never had so many available at one time, from stocks to different cryptocurrencies. Now, I mentioned on this show back in December, a vaccine. Everybody was talking about the big names in the vaccines. The one that really caught my attention was Vaxart, because it's not a shot, it's a pill. It's an oral vaccine. And I brought it to you guys and got my toe wet at $7. And today's high is $24.90. So I know that some of you were along for the ride, so that bell's for you. Congratulations. Mike asks, what's the target for Dodge? I suppose everybody has their own personal target, but the Dodge Army is $1. Oh, I don't want to go through all that. I'm already a member in good standing. So hang on. Let me just bring up my other browser. There we go. Okay. So if you don't follow us on Twitter, please do. The more people that follow us, the more people can find us. So now we go to POGE. And part of the reason for today's bump is Elon talked about it last night. Elon Musk said Dogecoin is the people's crypto. February 14th, 2021 at 9 Eastern. Buy and hold. Okay. Elon Musk hearts Dogecoin. This is getting a lot of attention, guys. So we're talking about something that's currently about 4 cents. You might look at it, you know, but again, no mortgage money. This is not a solicitation to buy or sell Dogecoin. I'm just sharing the news with you. Speaking of the news, our news site is back up, but it's not without its issues. So we're still getting it all squared away. Now, let me just show you this. Oh, I was going to show you on here. There's something called here you go, Doge to $1. So there's a whole group of people out there called the Doge Army, and their mantra is to take it to $1. So whether they can or not, I don't know. Let's go to coinmarketcap.com. Okay, today's Dogecoin price. So it's up 45% over the last day. Total crypto market volume over the last 24 hours is 167.49 billion. That's B as in billion, which makes a 16.4% increase. The total volume in DeFi is currently 18.22 billion of the total crypto market volume. The volume of all stable coins, that's coins that are like pegged to the dollar, is 134.8 billion, which is 80% of the total crypto market's 24-hour volume. BTC is currently at 37,000. Bitcoin's dominance is currently 61.22%, decrease of 38% over the day. Now I want to go to, take me back. Oh, not all the way there. I want to find, it should be in here somewhere. There we go. Okay. Now, what do these numbers mean? I'm going to scroll up to show you the top of the column. Okay, so the first set of numbers, the price. The second column is the percentage over the last 24 hours. The WSB is up 134% over the last 24 hours. This is over the last 7 days. This is the market cap, okay? Now, with a stock, the way you determine the market cap, let's say ABC company has 1 million shares and they're trading at $1. That means that company has a market cap of $1 million. They got 1 million shares. Shares are trading at $1. So they have a market cap of $1 million. Okay. This is the volume. This is the circulating supply. Okay. So the market cap of Dodge that's 3 digits, 6 digits, 9 digits. 6 digits would be 6 billion, but there's 9. That's 6 billion. These in bold. It's the market cap. Volume. Now, coin market cap, go here and yeah, look this up yourself. Again, not a solicitation to buy or sell Dogecoin. Do have an interest in it. I just posted again in the Breeze channel a link. Thought I posted a link. Where did I post it? Okay, Dogecoin. Manage the group. It's a public group. T.me. There we go. So we started a discussion group over the weekend. This is where everybody can comment, ask questions, whatever the case. So in Telegram, just go to the Breeze channel, click on that, and you'll be able to get in where I post some charts and when news articles come along. And when some of our traders get very happy because their Dogecoin just way up. This is a 62% Feb retracement. I posted this yesterday. So see, we were sitting right at a 62% Feb retracement yesterday. Today. Now you can get your price quote in euros, US dollar, Bitcoin. So that 62% retracement. From there to there. See how we were sitting at right on that 62% fib? And then this is what's happened over the last, once we hit the 62% fib, 1 day, 2 days. So 2 days later, that's where we are. Okay. Okay. Do you have any other questions in here that I have not answered? I don't see them. Guys, if there is a question, if you've asked a question today that did not get answered, please post it in the chat box because I'm getting ready to wrap things up. And I don't ever like to leave any questions unanswered. We are hopefully going to get the new site fully operational this afternoon. Roberto's helping me. Lee's been instrumental. So thank you guys, both of you. And I'd really like to tomorrow. Oh, tomorrow, big day tomorrow. Some of you I know have been following the official price maker channel, okay, for G999. And is there a picture of Bruce up here? Anyway, Bruce is the guy that makes these videos. He's from Australia. And to my knowledge, he's done no public interviews at this point. CFRN is about to change that. He has kindly, graciously agreed to come and talk with us tomorrow and answer questions. He'll be joining the show tomorrow at 1 p.m. Eastern. Hopefully you'll be joining the show as well. And G999 is the coin behind the Golden Journey. Okay, David Grant was on the show yesterday, and everything we talked about yesterday, all revolves around G999 coin. And that's what the price maker channel is about. Targets for G999, once the go signal is given, is 1/4 and 50 cents, and 75 cents, and then $1. Okay. And then who knows? I don't. So Bruce is, we're gonna have a humongous audience tomorrow. It quite possibly the largest live audience we've ever had since we started this show back in April of 2005. So I'm really looking forward to it. And from everything I can tell from his videos and from the messages that we've sent back and forth, he's a really nice guy and a smart guy. Wicked smart in a good way. Okay, I don't see any other questions. Still got a few minutes to put one in the chat box if you got one. Now tonight is members only workshop, 9 p.m. Eastern. You take a trial with us. We treat you like a member for 5 days. You have access to everything we do. The only thing you don't have access to is the members only workshop on Thursday night. So if you've been on the trial and you are ready to become a lifetime member, lifetime means lifetime. One payment, one money, no upsells. We won't be trying to push additional indicators on you or videos. You just won't spend any more money. I'll just leave it at that. That's the truth. EminiFuturesTrading.com. Go there, click the link. There's still plenty of time left in the day for Valerie to send you all the information you need. And when she sends you emails, what you should do is in your email client, create a folder, a CFRN folder. Because we don't just know how when you sign up for most things with most places, you just get bombarded with emails. We never sell our list. We never share names or any of that stuff. But we also don't send you because we're always available in Telegram, always available in the room and on the show and everything else, we got nothing to market to you. Once you become a passport holder, we don't have anything else to sell you. So unless, maybe the show's been canceled for the day because of whatever, we might send you an email about that. Otherwise, we don't have anything to email you. But create a folder so that when Valerie sends, if you become a member, you need to save every email she sends you, because there's an important reason she sent you the email. It's got links to get your charts set up, your indicators indicating, weekly trading zones, Telegram, it's just everything that you need. It's important. Now, obviously, if you accidentally delete it, she'll send it to you again. But when you get that email, there's so much stuff in it, it just, don't let that overwhelm you. We'll go through it bit by bit by bit until it all makes perfect sense. Okay. Now, we started talking yesterday afternoon in the discussion group about, some of you live in relatively small towns. We are members of the Better Business Bureau. And if there is a Better Business Bureau office in your town, based on your affiliation with CFRN, you can probably book their conference room once a week for free. And why would you do such a thing? Well, if you have an interest in becoming a CFRN franchise owner, what you would do is you would hold that once a week meeting. You would put it in your local paper. You could pass out flyers. You could, go to the Elks Club or the Moose Club and whatever. Just invite anybody that you know to come to your meeting at the Better Business Bureau in their very nice conference room. And you would tell them about your experience with CFRN. I'll provide you with some slides because they always have the digital projectors and stuff. But basically, you would tell them who we are, what we do, how we do it. You'd share with them your experience, right? And then you would extend them and take a free trial. At which point we take over and we give them the royal treatment, just like we do everybody that takes the trial. And then if they decide to become a passport holder, why then you earn a commission. Now, the franchise fee, hold on to your hat, okay? The cost to have a franchise in your regional area has already been paid. About your passport. True story. When I said we won't charge you any more money after you buy your passport, I meant that. We won't. If you want to open a local franchise in Podunk, Idaho, or Mud Lake, Iowa, let me know. We'll get you the materials that you need. We'll make sure that you understand legality so you never cross a line, something you're not supposed to say or shouldn't say. Okay, we'll make sure you have that down. Then it's just kind of like, have coffee with whoever shows up, telling them who we are, what we do, how we do it, sharing your own personal experience, whatever that is, and then giving each one of them an opportunity to take the free trial. During their week's free trial, you'll probably want to meet with them in a go-to meeting environment, which we'll provide for you, like 30 minutes every day, maybe before the room opens, after the afternoon broadcast. So, as it progresses, you might start out with a group of 20 people, and by Wednesday you're down to 10, and about the time Friday rolls around, maybe 5 are still very interested, and so there you go. Multiple income streams. You've always heard us talk about the importance of multiple income streams. Scripture says that a man should have multiple income streams. In fact, it says you should have 7. Now, our belief is that the more streams you can create under one umbrella, Like, I'm not much of a, I'm no car mechanic, right? I can't even fix a gasoline powered lawnmower. I guess I could with a YouTube video, but I don't have any desire to. So if I'm going to create additional income streams, because I've spent so many years hanging out with the markets, it would only make sense that my additional income streams are in some way going to be market related. So this is an opportunity for you to develop a second income stream, you know, aside from the money that you earn from trading. Now, let's say you've actually been an auto mechanic all your life, and unfortunately, sometimes customers can't pay their bill, or the bill is so much that they just walk away and go, I give up. You can have the doggone thing. I can't afford to get it fixed. Most mechanics I know over time accumulate some cars in their parking lot that they now own, you know, not because they wanted to, but that's just how it turned out. Well, if the lot next door is available, you might rent that lot and move those cars next door. And if your place is called Joe's Auto Mechanic, then right next door you could have Joe's used car sales. You just developed a second income stream. Now, before anybody that purchases a car from your used car lot, before they drive off the lot, they got to have insurance and registration. And so at Joe's used car lot right next door, you put in a desk with a computer and you hire a personable young lady or young man to do what? Sell insurance and process the registration. That's another income stream. And I hear those wheels turning. I bet you could come up with 7 income streams that all branch out from your many years of fixing people's cars and trucks. Just got to put on the thinking cap. And you might say, well, yeah, I'm really good at fixing cars, but all that sales stuff, and people need jobs, man. You know, it wouldn't be too hard, you know, to find somebody to manage that used car lot so that you know, while you're fixing cars over here, he's over there selling cars, and the person you hire to do the registration and sell the insurance, that's recurring income. Every month when that customer pays their insurance premium, you get a little piece of that, right? So you're creating passive income there. And all of a sudden, in your small town, you're a kingpin. Pretty soon you're advertising on the local AM radio station. So that's how you could build a business with your knowledge of automotive stuff. But if your heart and passion is with markets, we'll help you build yourself a business that way, okay? And again, if you own a passport, you already have paid. Now, what I don't want to do is I don't want to put 2 people competing against each other in the same small geographical region. So if you think it's something you want to do, you should let us know so that we put your name on a list. And doesn't mean you have to jump and do it right away, but you're kind of reserving that territory. And first come, first served. And then if somebody else wants that same territory, then as a courtesy, we would give you the first right of refusal. Okay. So I'll stop there before it starts to get all complicated. And our good word for the day. Time to wrap it up and bring it home. Get my notes out. Yesterday we talked about how generous God is and how generous we should be. Today we'll talk about forgiveness. Why should we forgive people? Because we've been forgiven. Matthew 18:33. And should not you have had mercy on your fellow servant as I had mercy on you? We all know that parable, that story of the wealthy man who forgave one of his servants a tremendous debt. And the servant who was forgiven that tremendous debt then went to somebody under him who owed him a bunch of money, and grabbed him by the neck and pinned him to the wall and says, you better pay me or I'm going to put you in debtor's prison. Oh, that's not cool, right? Of course not. Jesus said, the kingdom of heaven can be compared to a king who decided to bring his accounts up to date with servants who had borrowed money from him. In the process, one of his debtors brought in who owed him the equivalent of $1 million in today's money. Well, the fellow couldn't pay. So his master ordered that he be sold along with his wife, his children, and everything he owned to pay the debt. But the man fell down before his master and begged him, please be patient with me and I'll pay it all. His master was filled with pity for him and forgave his debt. But when the man left the king, he went to a fellow servant who owed him a few $1,000s. He grabbed him by the throat and demanded instant payment. His fellow servant begged for just a little more time. Be patient with me and I will pay it, he pleaded. But his creditor would not wait. He had the man arrested and put in prison until the debt could be paid in full. Now the king caught wind of this. The king called in the man he had forgiven and said, you evil servant, I forgave you that tremendous debt because you pleaded with me. Shouldn't you have mercy on your fellow servant just as I had mercy on you? Then the angry king sent the man to prison to be tortured until he paid his entire debt. How are you going to pay a debt while you're in prison being tortured? But that's a story for another day. The angry king sent the man to prison to be tortured until he had paid his entire debt. That's what my heavenly Father will do to you if you refuse to forgive your brothers and sisters from your heart. That's Matthew 18:23 through 35. Read and study the whole thing. Now, we use a king here and money as an example, but forgiveness is not always about forgiving a financial debt. It can be, maybe somebody hurt you in a different way. And there's, so many ways that we can hurt one another, and we do. But when somebody hurts you, not forgiving them doesn't hurt them, it hurts you. So when you forgive somebody for their wrong, whatever it is, you set yourself free. Matthew 18:23, these are the words of Jesus. In your red letter edition, everything I just shared with you would be in red letters, okay? So Jesus ended up saying, that's what my heavenly Father will do to you if you refuse to forgive your brothers and sisters from your heart. So friend, if you're harboring resentment and refusing to forgive someone, read this scripture, Matthew 18:23 through 35. Read it again and again. Let the Holy Spirit speak to you. You might be thinking, well, nobody owes me any money. I wish they did, but no, nobody owes me any money. Okay, but what grudge, what resentment might you be harboring? What relative is it that at Thanksgiving you refused to sit next to them at the table? It might have been something they did to you when you both were teenagers, but you've been carrying that for how many years? It's not hurting them. It only hurts you. If you're harboring resentment and refusing to forgive someone, go read Matthew 18:23-35, and then through that lens, take a look at your own life. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.